That's better. All right. I think that's better. That should work for me. Okay. Okay. Okay, I need one more thing here. I'm gonna need one more thing here. Yeah, I'm gonna need that. Oh, fuck. Shit. I gotta get used to how that works, right? Jeez, there it goes. There it goes. Yep, push against me. And my second. Push. There, cancel. All right. Okay, yep, it's coming back up. Okay, there we go. Sorry for the boring start, guys. I'm getting used to the new office equipment. There's a whole bunch of new things here. Let me get out of this trade. This is not a good position. I ended up buying in pretty high over there. Also, I'm not seeing what I'd like to be seeing here. Okay. This is what I want here. This one should be white. There we go. Okay. And there we go. All right. Just kind of checking my settings here. Okay, good. Here we go. That's better. All right. So let me see here. Why was I short on this one? We should be going long above this level. Yeah, it should be going long above this level. That's the thing. I'll be taking long trades above this. Looks like we end up peaking, hitting a bottom here. That's fine. Yep. Let's see a nice up thrust here. Yep, there it is. A little bit in. I'll close this out manually. Just going to take a few dollars on this one. Yeah, right there. Yeah, this is going to be a real small move here. Mm-hmm. Oh, already took it out. That's fine. It's going to pull. It's going to pull back from this point. So I'm going to try and do my best. I'm sorry. Apparently, I still have that head cold going on. That's fine. This is the first morning that I am using the new desk setup. It's a nice big sprawling desk. I needed more space, place for the camera. My audio equipment is up here, my keyboard, so on. And when I say keyboard, I'm talking about, like piano, right? So yeah, I'm getting used to the layout a little bit. I'm going to make some adjustments as things go on. We will see how it works, right? I'm going to try and do a very as comprehensive as possible live breakdown of what happens with price action while it's playing out. As a matter of fact, let me get rid of all the indicators. I just want to put the session indicator on here, and we're going to go for. I just want to find a New York. I got it set for. Yeah, good. I got it set for 7 a.m. Let me just come over here and set this for 7, so that I know when we get there, right? There we go. So that's going to be New York. Okay. And we're in London session right now. Still got quite a while. Okay. There we go. Oh, sorry. Top, left, there. That's the way I like it. Oh, can I put it center? Oh, I can. Good. That's great. I like that. Okay. It's watching some very rigid price action right now. Looks like London is just kind of setting up for the New York. I just want to get an idea of what's happening in the market right now. I'm looking at a 5-minute chart. And I have 8-hour candles overlaid on here. These are 8-hour candles. So I just want to see where the highs and lows are for those time frames. So just want to see this, right? I call that resistance. This one down here. All right. Okay, this one's going to come up to here. Price tries to make a little move down there. That's fine. I know where it's going. Of course, I got the 0 lag multi-time frame moving average on the chart. This will be the trading range right here. Okay, and then all of these equal this. I want to see what the new range is. It's going to be here, just about right in there. Okay, there's another little pièce de résistance. Okay. Promise I won't do that bad French accent again. Just for you guys. Push down here. Okay, good. This is the range. Not a good range. We have liquidity above this level to here. Not swept yet. So we do have liquidity not complete yet. I'm going to draw this out. Oh, good. Swing low right there, right? Okay, good. Let's go straight to here. All right, that one's already swept. That's fine. Good here. Strong liquid. Oh, no, it's not. There's the other one. Okay. I have a method of drawing out liquidity in my charts. I need to do a video for this for you guys. It's a little difficult. It can be. There's another one here. There we go. Okay, there. So we have liquidity near the highs for yesterday. Not exactly at the highs, but right near the highs for yesterday. Let me just kind of turn the sessions off. We don't need that. And we'll turn this one off, the overlay off. And then we'll get into some price action breakdown, right? So we'll just kind of walk this through, right? I want to get a channel working on here. I want to get a parallel channel. And I'll just kind of put it back into place in a second. I just don't want to forget where I am with it. Higher, low. And then a second higher, low. We're good here. All right, there's the higher low right there. See, higher low right here snuck right in, and this low did push up into a higher close. This one pushed up into another higher close. So I don't want this first one. I want the second one right there, right? I want that. So I'm just gonna, oop, I didn't mean to drop that right there. I didn't mean to drop that right there. There we go. I want this first low and this low. I want to connect them, put them up. And when I get a trend line break, that's when I want to deal with something. Now, the top of this parallel channel is going to go to this last lower high that's over here. So I'm just going to mark that, right? Just so I can get down to it. There. Okay. And then I'm just going to mark this other higher low right here, right? I'm just going to mark that. Okay. If I end up breaking out the top of this range, I'm just going to drag this anchor up to here. That's it. Right. So not really a whole lot going on in the chart, right? This is going to be my, what is this? My trading range right here, right? This is a new trading range. Okay. And then I'll tell you guys what's going on with some little price action analysis. There. Background. Do this too. I don't know what's up with Trading View. I typed it in there, right? Didn't I type it in there? I typed in the word trading range, and like, there we go. See, it just takes a while to pop up. I don't know what they're doing. They tell me I need to delete cache. It's like they're deleting my cache. All right, so let's see what we have here. Want to know if I have a divergence on this point, but we have higher highs and higher lows here. This is a bit of a flat market right there. It's just, it's moving upwards. But if we look at the candles individually, we could look in this area and see if there's any breaks of previous highs or previous lows. That'll tell us exactly, you know, what kind of a trend is happening here, right? So just to give you guys an idea, right? So you have I want you to understand when you do not simply say, oh, I have a new trend. No, I don't want you to say you have a new trend, right? For example, we got this move down here, right? So if the chart was cut at this point, okay, if it was cut at this point, people see this long candle pushing down, breaking through this low. Like, okay, I'm moving into a downtrend now, right? Because they take a look at their RSI, they see that it's, you know, kind of coming away from a high. It starts dropping below its midline. It's not the case here, okay? You have major highs, major lows, right? You got major highs and lows. Oh, I didn't check my camera. Yeah, we're good. Microphone's too high. There. Yeah, I still got some setup to do here. Let's see. Yeah, we're good. You have major highs, major lows. Then you have minor highs and minor lows, right? So this would be a major here, and this would be a major because it's an entire range. And then the new candles are forming inside of this range, right? If I just draw this out from top to bottom, right? You can see that these new highs and lows, right? There's the first low. Now I get a high here, a low here, right? Another high here, a low there, right? They're all inside of this range. So currently, you do not have a new trend yet. You don't have one, okay? So you came off of a major high. I call it a major high because it broke a trend line to continue the downtrend. Made a low and then started making higher highs and higher lows. But it's not a new trend yet, okay? Not until this point, okay? So this low continues going upwards. Here's the highest point prior to this low, right? Here's the highest point. That means you would have to find price action that cleanly breaks that level without making a swing low. Right, so here's this. The swing low comes way over here, but the structure is broken back here, a few candles prior, right? So that means this becomes a new higher low. This validates this low. And you see how you can't simply use an indicator to say, where's my highs and lows? Why aren't they plotting out super fast? You know, I need to plot out faster. You can't do that. It doesn't work out that way. Something has to happen now so that you can look backwards and say, oh, okay, how did I get here, right? I got here from this low. This low had a high before, the highest point. Did I break that high? Yes, I did. There we go. I broke that high. That means this low and this open are strong, right? So you could actually draw this out and say, I got good support here, okay? I got support here. I actually want to move this down to this point and say this is my clean support right there. This is my first line of support. So if price pulls down, it wants to get into some, previous day liquidity on the lows, and I would expect it to come down here, not this here, right? I'm not going to expect that. But this would also be the last line of defense. Like this would be where all the support actually is, okay? So you can see that your structure is here, okay? Breaks it there. Now this level here, right here, this one, it exists in the future, not forever, but for a long period of time. So if you want, you could take this level and you could just kind of look backwards as well, right? You're going to want to find out where price action reacted around this level, okay? Usually you're looking for a high, another high in the previous downtrend, right? So that would be like this. So here's the high, right? I'm going to find the opening price that broke this low. So the opening price that broke this low, here's the open, right? I'm just going to go to the opening, to the closing price of this, okay? When you get there, you're going to realize that you have a flip zone. Okay, see? This is a place where the retest takes place. So you get a downtrend, it moves up, and you get a downtrend again, right? So you're looking here, the highest open, and you look backwards just above it. You're going to find a good, what do you call it? You're gonna not above it, below it. You look backwards just below it, and in the previous uptrend, you should find, a zone. It's going to be where price action was able to open below this, it opened below it, and it broke through that level, right? So let me just kind of copy this one down here just so we could see what's going on. Let me back this up. And now again, I'm looking for an open that is slightly below this that broke the previous structure, okay? An open below this that broke the previous structure. I have to go back here, and we have an open right here. It's at the same level, okay? So this is going to be a strong, what do you call it? I got another one right there. Same level again. So same level, same level. This didn't break any previous structure. This went up, didn't break any structure. This one did, however, right here. So we got this here. So this would be a zone that we could say there's a lot of ranging activity inside this zone. Okay. If I drag this out to the right, you're going to see the market will flip at this zone, right? We were already talking about here. We're going to look in the future. So you're going to get a retest, like price going to come up, retest the top of this, and then go up even higher. Let's find that. So my zone is a little bit off. It's a little bit, but there's your retest, and it's trying to go up a little higher. So it probably needs to just kind of tap into this again. Now, if you end up looking at the RSI and price action, you'll find a hidden bullish divergence in this area. And I'll use a divergence indicator to track that. I'm going to show you guys a little trick with divergence indicators. We'll cover that today, right? Let me see what's happening here. Hey, anybody in the live now? Hey, you guys can get on the live chat. It's fine, right? Get on the live chat. It's there. Enjoy. Don't forget to grab your cup of whatever it is you're having. And let's get into some trades. It looks like I'm already in one now, right? Why is this saying I can subscribe to my own channel? What is that? That's weird. Okay. Sorry, I was looking at the back end of the system. There we go. All right, so we don't necessarily need this. I just wanted to show you guys like how to find something like that. Oh, I think I needed that one, right? Yeah, I need that one. Yeah, and then this. Okay, we got this here. Good. Support down there. We got liquidity on the top. Look, it's trying to hit that liquidity now. I just want to see where we are with this. All right, looks like I could pull out and come to my support level. Let's do that. I want to go down. I want to take this at the open down here, so it's going to be right there. All right, I'm going to put this on the open here. You can adjust these channels. It's all right. Let's open it right there, just a little bit further. There we go. Yeah, there we go. So you can adjust these channels just to help you with your price action, see where your levels are. I don't like being in the low side like this. I want to see where I am with my moving averages. Okay, moving average is getting mixed up. Looks like it's trying to push for a short. So we'll make a little break down there. So I want to see where the support is below this. Okay, lots of support, resistance right here. Okay. Yeah, still pushing for a short. I wouldn't necessarily take a short. It's not a good short. It's just a lack of interest. That's where we are. It's a lack of interest. So, like I was saying, you're getting structure to the upside over here, right? Oops, there we go. So your new structure is there. It gets broken over here, and then you get a retest, right? So then where's your new structure? Because you had this and this, right? Here's your high and your low, and then you have a break. So now you have to make a new low. It ends up being right there. From here, price goes up to this closing price, right? What did it break? It broke the high that it made in the process, okay? So you have a break of structure here, and there's a continuation here. So now this was the range in the downtrend, okay? It made a swing high and then a swing low. So what's the range now? Here to here. In the downtrend, like the pullback, this is the pullback, okay? But the range to actually trade is this, the old high to the new high, right? Old high to the new high. It's this, all right? And when price action doesn't really pull far into the range, I'm just going to go like this to the new high, right? You see that here, price only dipped down just a little bit, okay? When it doesn't really cover much of the range, like I like to see it get down to that equilibrium level, that's a nice strong push to the upside, and it's kind of weak right here. So I don't really like this. Where is it? I don't like this as a pullback. I like saying a pullback that's really nice and deep, right? Gets into the moving averages and then starts pushing long again. Okay. So that being said, here's your old high, new low, right? And then price breaks that, continues higher, and then starts pulling back, which means this is your high and this is your low. And now look at the kind of range that you end up getting. Okay. It's easier to trade something like this because price comes down, cuts to the equilibrium. You're good on your moving averages. Your RSI is probably in a decent place, right? It's going to come right here through the equilibrium. And you can see where your previous high was. So you can trade until that point and then wait. So let's see what the RSI is here. Okay. So we're still range trading according to, the way this one lays out. There's still a lot of sellers in the market, not a lot of buyers, right? You can see that this is red, this is red. This line being red means that the buyers have stepped out of the market. Then they started stepping in the market over here. So let's dip that out. So that means if you're trading against sellers, right, you're going long against sellers, you really just want to go up to the previous high. That's all you want to do, right? So then you get a new range, okay? You get a new range, right? There's your high. Here's your low, right? Here's your range. You get this nice pull into it, right? Get a nice pull into it. You're breaking through the equilibrium. And then, you're probably trading into the sellers again, right? We're at this point. Okay. See, it's out ranging quite heavily. The liquidity ribbon is still red. I don't want to take any of this. I want to take the ones where there's interest. Right? Okay, this means there's interest. There's green activity taking place in the liquidity. So only at that point I would be looking to trade back up into a previous high. So, and I don't want to get into it like saying, this is what you do, just follow the indicator. That's not the case here. So I want to see good price action breaks. I wanted to take a look close at this and show you guys how would you know that you are not supposed to wait. This is where the market has been moving up and then it's pausing. This is actually a base and this is the other part of the rally. So what you have is this, right? You've heard of this before, the rally, base, rally. So this is the rally, right? Rally means it goes long. And then you have a base. All of this is base. Okay. And then you have another rally. Okay. That's what you have. And that's this. All right. You can call it whatever kind of shape that you want. Three kings, head and shoulders, whatever. I don't really get into price action patterns. But this is base. You can tell that it's base because in the price action of the individual candles, like the individual candles. If you just look at the highs and lows, I'm just going to draw this out like this. Okay. Let me stop this from happening. There. So if you look at, so you got a high here, it doesn't get broken by the next candle. All right. I'm just looking at one candle to the next, and I'm going to use this end to mark the high and this end to mark the low. That's it. Right. So if you look at the next candle, it doesn't break the high. Okay. You break the low, you break the low, you break the low. You don't break the low, right? But you didn't break the major, right? You didn't break the major uptrend either, so you didn't pull back into it. So then this candle breaks the previous high, breaks the previous high, but it doesn't break the major high. So you don't have a full uptrend. You're ranging. That's what's happening here. This is breaking a minor structure, okay? It's not breaking the external structure, external liquidity. It's not doing that, all right? So this candle breaks the previous high. It's just minor. This one doesn't break the previous high. Okay, see? Doesn't break the previous low, right? Here's the low. It's right there. It's not broken by the next candle. Maybe if I do it this way, right? So here's your low. This candle closes here. It doesn't break the previous low. This candle closes not above the previous high. This one closes not above the previous low. So this is what I'm talking about. There is no structure here. You need to break previous structure. So when you're looking at structure, you don't have to look at the major swings. You don't have to do that. Major break of structure, break of major swings simply means that the market is still pushing like in a decent, it's got some decent strength to it. But here, there's no strength. Like I'm looking at all the candles, right? I'm not breaking any previous swings. Previous swing, not broken. Previous swing, not broken, right? Previous swing, not broken. I'm just looking at either the high, the low, and where's the next close. Okay, so this one closes long. So at this point, you're saying, okay, now I'm starting to get, new structure, because at this point, I've broken from a bearish candle into a bullish candle, and I broke the bullish high. I broke that high on the previous bullish. So at this point, you're looking at starting to go long, right? You don't want to go long. The market is just picking up in that direction. Okay, so that means, how did you break this high? Well, just look at the opening price. Okay, you're just going to look at the opening price. I'm going to do this there, and then kind of come over a couple. This opening price is going to be your new internal support. You see how price comes down to this level. Okay, so you need price to start moving to break structure. If it doesn't do it like in a good range, then you have to wait for it to make a nice high and a nice low, right? So this open breaks the previous high, and this one does not. So if that's the case, this becomes your low. This becomes your high. So what's your trading range? You want to pull down into a good part of your range. This is no different than looking at it on higher time frame candles. I'm just looking at the individual candles, right? Let's take this midline and make it, there we go, so we can see the equilibrium a little bit better, okay? Am I extending to the right? I don't want to. Right? So you have your low, you've got your high, and the equilibrium is here, right? I want to be trading long once I get just above the equilibrium. Okay, great, there we go. Price pulls down into that same support level, right? See that support level here? Taps into support, closes above the equilibrium. So I want to start taking longs at this point, provided I am, still in a good position. Leaves behind a fair value gap and so on. So, but your support level is still down here. No matter what happens, your support level is still, oops, sorry, not there. There's your support level. You see how price action is not really getting underneath support. It's not closing below it, but then it starts closing above it. So this is a nice little trick you can use to see like when you're range trade and when price is ranging, and you want to just take your time to figure out which way it's going to be going, right? So let's take this off here. I don't have too much on the chart. Let's see if we have what we need to get into a trade now. I just wanted to see if like volatility started picking up a little bit. So again, you can see here, right? This price action, this open breaks the high and it breaks the high, and it breaks, nope, and it stops at this. So that means you have resistance here and support here, okay? That's your resistance and support. There it is, right? You have resistance here, but it doesn't break through the low. So this is support here because it broke the previous high. Individual candles. This support came up and it broke that previous high. This resistance did not break the low. So you don't have any resistance here. That means there's liquidity left behind this level. So if the open does not break the previous close or the previous low, right? But you do have a minor downtrend, then there's not enough here to break the downtrend. You need that to take place. So there's liquidity here, right? You got the swing here. It's broken by that. It's fine. So what I usually do is I look for the, I just kind of look from here to the left, and I look for the last time that an opening price broke a swing low, right? So you don't have any swing lows here, right? Because all of these are, as I move backwards, these are all higher lows. If I move this way, they're lower lows, right? So here's a low, lower, 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 like everything's just getting lower, right? Until I get to this. Here's a high one, and then it dips down again. High and then low. That means my resistance is here. This is a good opening price. This, right? So the liquidity is there. That's where liquidity is. And you see how it tapped it out and then started moving down again. So now it needs to create new liquidity, right? So it doesn't even make new liquidity. That's fine. And let's see if it's making any new liquidity. I'm doing this because like the volatility is dropping out, okay? And I just want to kind of look backwards just a little bit. And if I see the liquidity has been wiped out, then I have to look for new liquidity, okay? So if the liquidity is wiped out here, then that means it was used somewhere down here, because you can't get here by being on top, right? You have to get here by being down here somewhere. How did that happen? So looking at the swings, I got to look at the price swings, okay? I need to find the first one that was broken to the long side, right? So here, this one was broken to the long side, all right? This close is higher than this open and this open. So you have support at this level. All right, I'm just going to mark this out as support. I'm just going to do that. Now I need to find an area that did not break the swing. Okay, it didn't break the swing. On the way down, we got this swing here. Okay, got a swing right there, and it was wicked out, but you do not have a close, right? You don't have a close, right? You don't have that. So that means this nice move up has to make a nice higher lows all the way up, higher highs all the way up. Has to do that. If it has higher lows and higher highs all the way through, then that means this support is valid. Unfortunately, you get low, higher low, higher low, higher low, higher low, higher low, lower low. So that means there was a resistance point here, okay? And there's your liquidity right there. Well, that's where it starts, from here to there. Okay? So there's liquidity down here. There we go. I'm doing this because I want to see, not only do I want to see structure breaks, change of character, stuff like that. So we have this lower highs in these swings. And then we get this move up here. This would be the change of character. Now you can't just have a change of character. There we go. You can't just have a change of character. After the change of character, then you need new structure. You got to have new structure in the market. So once you get a change of character, you then need to have a, well, in this case, a change of character is to the long side, right? Change of characters to the long side. After that, you need to have a higher low, right? And then a higher high. You need to have that. So with the, get the change of character, you have a high, oop, that's not what I want. You get the higher low, right? And you get a higher high because this high is higher than this one. So what does that mean I get to do? I'm going to turn this one off for now. I don't want to see it. I want to see a smaller one. Let's get a new one here. Draw up my channel. Okay. So you got a higher low came off of this low. Here's your low, right? What is the last low in the previous downtrend? It's right there. It's at this level right here, okay? So I'm going to draw this out here. There. I'm going to go to the open of that price. So what I'm doing, so you guys know what I'm doing, is this. I wanted this candle, right? I want this candle, but I want the opening price. And then I just kind of put my channel right there. So then, since it's a really tight range, I want to expand this out a little bit. I want to find another, I want to find another higher, what do you call it? What do you call it? I want to find the next higher low that was in this, which happens to be the same place as the change in character. So do this. Change in character. Now I'm good to be doing my trades. That's it. That's how I do my parallel channels, right? The video that I did for parallel channels was not as detailed as that, but it will get you to where you need to be. All right, so now that my channel is a lot smaller, I can actually do some like small scalping moves here. Let's see where we are with the RSI. Yep, we're lacking interest to the long side, so there's going to be a little fake out taking place here. I think I want to pull a little short right here, to be honest with you. I think that's what I want to do. I want a little short here. Let's, yep, right there. Yeah. Looks like a little fake out is taking place. Not really feeling that one. So I'm going to do a sell right here. Take a real small amount. I'm going to push right back down into this. Push right down into there. Take this out. Let that one play out. Just going to let it run. So I'm waiting for a pullback here. That's why. There we go. And to be honest with you, I wish I could set I wish I could set a stop order to take a long, but it doesn't really work out that way, right? What I could do is, you know what? Yeah, that's what I could do. Hang on a second. Let me put this here. Take that out. Set an alert for this level. There. Then I could just take this out. Where is it? 102. That's going to be a array. Not that one. That's the one. There we go. I don't trust this move. I don't. I could be completely wrong. I just don't trust that move. It is after a change of character. That's fine. Let's go here. Okay. All right. So, see this little fair value gap was formed down in here, right? I'm sure you could see that. This little fair value gap that was formed right in, see this low right here currently, and this high, there's a fair value gap right in there just for right now. We'll see if price action comes back and retraces on that one. So we have a low volatility place right here. Too sensitive? Let's try and turn this down. They're not doing much right now. See if I can get this to be less sensitive. There. Oh, you know what I don't have here, right? There we go. Oh, well, look at that. Rejections off the short time frame, breaking that one. Not bad. Not bad at all. Oh, wow. Okay. Okay. So I'm ahead of my 14 period moving average. It's fine. But what I don't trust is this. Here's my previous high on the RSI. It's already broken. Price is not equating anything to that. It's already a divergence, right? This is already a divergence. Okay. The RSI is higher, right? Price is lower. There we go. That's the RSI. Wait, which way is it? Yeah, RSI is here. This one's here. Bit of break of that. We're good. Excuse me a second while I do something in the back end of the website, the back end of the channel. Okay, there we go. What does this look like here? There. I think I'm going to miss out on this long, huh? Is that what it looks like? Let's see. Oh, okay. I see what's happening now. I think. Yeah, it's pushing up for a long. What do you know? Yes, it did make it. Okay. Nope. That's not what I want. Oh, sorry. That's what I want right there. Whew. Whew. Was not what I wanted. I didn't want to sell. I wanted to buy. Now I want to see how this plays out because I don't trust that the RSI is here. Broken, right? See how it's already pulling back. All right. We should get a pullback here, back into the fair value gap. Yeah, I gotta fix my equipment. It's a little annoying. You notice how I keep moving my microphone around. Okay, there. All right, let's run this out for a second, and let's go to all right. Let's just see where we are on momentum. Yeah. So it's still in a long move. Mm-hmm. Yep. Not as much as a long move. Oh. Okay. Okay. Yeah, it's still pushing long. I'm surprised. I was expecting a pullback, further pullback for a short. Didn't get that. That's fine. That being said, excuse me. I am so sorry to be clearing my throat like that. So, all right, move up, close above the highs, great. Close below the low. This is called a change in the state of delivery, right? Change in the state of delivery is when you get a full candle, right? The candle closes below the previous open and it's below the previous low, okay? So it's a bullish candle first, bearish candle second in this case. And it's called a change in the state of delivery. What it's doing is a change in the state of delivery is essentially it's a change of character on a smaller time frame. That's what that is, right? It's got a low and a close that's lower than the previous candle from the uptrend. You had an uptrend going on, right? So I wanted to set, I had that alert set because I wanted to buy above that level. I ended up buying up here. So I ended up buying too high. I should have waited for it to come back down to my alert. Anyway, so back to this change in the state of delivery, right? CISD, okay? Okay, change in the state of delivery. Pushes up, gives you not an engulfing candle, but it gives you a low and a close that's lower than the previous low. That means price action was moving up, and this is a bearish change in a state of delivery. It pushes down. Doesn't really cause a downtrend, but it does tell you like, hey, we have a changing character on a smaller time frame, right? So that being said, you're going to say that, hey, I have resistance here. Okay, this is resistance. Price gets above the resistance, continues long, and we're seeing this rejection taking place. So that's what I'm looking for. In this uptrend, I get a change in state of delivery. I'm marking, I want to just visually, that's what I do visually, right? I want to mark this level, okay, and see what kind of reactions I get from this level at the close of the candle. I want to be able to have a higher RSI, higher highs, higher lows, no, super swing lows, none of that stuff, right? I don't want to have any of that. Because this becomes a new, well, it was resistance because the price got below it. Now you're above it, okay? It becomes support. Now, this coming down, you would not call this a change in the state of delivery because it, closes. You wouldn't call it that. This is the change in the state of delivery. Delivery is what's currently happening in the market, okay? And it's an uptrend, a minor uptrend. You can see because I drew the channel this way, higher highs and the higher lows, even on the major ones. So that being said, a change in the state of delivery is a good way to know that price action is too far away from your moving averages. It's too far away from good price and stuff like that. So you can see I have my 14-period moving average set on a chart, and price is way up here. It's also below the trending moving average, which is angled down right now. So if anything, we should start seeing a divergence between these two. Okay, that's what we should start seeing. And if we do see a divergence, I'm going to hope this comes back into profit. And if it doesn't, then I'm just going to close it out. I can set my stop loss actually. Let me go over here. Let's see here. No, you know what? I'm not going to do that. I'm not going to do that. I wanted to set a stop loss, so I'm not going to set that one for here. It's just a small. I should verify that this is not a divergence first. So if you get a change in state delivery, look at the open of that price, right? If it's an uptrend, look at the open, mark the open, and you should get good reactions from that level, okay? So you want to see this change in a state of delivery. Where did it end? Where did it stop? It's going to stop at the equal closes on the low side. So comes down, closes lower, closes higher, closes lower. So in this area here, right? So you got resistance here, support here. This is the order block. Oops. This is the order block, okay? There. This is going to be the order block there, all right? And you can mark this going forward. So, just going to keep letting this play. That's fine. Put this back here, like that. I think I have one set for CISD. I do not, no. Changing the state delivery. I mean, you guys have any questions about this, feel free. Let's go ahead, drop it in the chat, whatever you want to do. I do have to open my email and check a couple things here while I'm letting this play. What do we have here? Okay. Yeah, we're good here. Good here. Good here. Let me check this stuff out. Well, that's bright. Yeah, there's my alert. There's this. Okay, we're good there. All right. All right. I want to move my camera too. I don't like where it is. This here. There we go. Boop. All right. I want to see this get recovered. I would like to see that. So, larger bodied candle here, right? This bullish, bearish candle, sorry. Larger body. This is not a change in a state of delivery. I forgot to verify this. What do you call it? Yeah, see, this is not a good. push right here. It's not a good push because the push is taking place from not down here, but it's taking place from up here. It's supposed to take place from down here. All right. So let me just kind of take a look at our relative strength. Yeah, see, we got a breakdown here. Breaks through, continues to the downside. That's fine. I'm not worried about it. Hitting this liquidity right now. I'm still expecting long. I'm gonna let this drop out. That's fine. I'm not gonna cry about it. To sim account, this is just to give you guys an idea about changing characters, you know, stated delivery, stuff like that. That's fine. And we're moving into, yeah, we're moving close to New York. So it's setting up for New York. It's developing liquidity for New York. That's what's happening here. Yeah. Look at it, just pushing all the way down through this liquidity. I'm not going to worry about it. Let me see. What else can we cover this morning? Oh, yeah. This big breakout taking place right here, right? Outside of my channel. Trending average is down. I want to see where I have it. Ah, there we go. I'm expecting longs above this. Yeah. Give me longs here. Okay. And oop. So we're inside of this trading range. Nope, not there. Like I told you from the start, this may be a bit of a boring session. Let's see. Morning, John. What's up, Goose? Can you expand on how to read the kill zone indicator? The kill zone? Sure, Goose. I could talk about that. When it comes to the kill zone, you do need to have some working knowledge of price action. That's why I'm also drawing out change of character, showing you guys what it looks like when you have, what do you call it? Change in a state of delivery as well as breakage structure, right? You need to understand, like, where is your trend? It is not an entry exit indicator. Don't, you know, look at it that way. As a matter of fact, while I'm here, let me make the adjustment to my camera that I wanted to do. 1 second here. There we go. All right. So, Goose, to answer your question, expanding on the kill zone, right? I've done a few videos about this. There's plenty content related to kill zone on the channel right now, so do feel free. You know, make sure you take your time, and go look for that stuff. And it's labeled as kill zone, right? And as a matter of fact, I think I have a playlist. Okay, I have a playlist in my YouTube channel that's specifically called kill zone, if I remember correctly. I can look it up, but I don't want to divert too much away from that. So anyway, give me 1 second here. There we go. So yeah, there's a playlist that's specifically for the kill zone, and you can get a bunch of information from there. But to give you an idea, right, what's happening here is, let me cover the liquidity ribbon first, right? Turn off the candles, turn off the RSI. Just want to do that, okay? And I don't know why I have the moving average here. I never use the moving average. I did that for you guys. Okay. So in the kill zone, you've got this liquidity ribbon. It's basically showing you that liquidity is entering the market or liquidity is exiting the market. Now, do not be misconceived. All right, do not take this the wrong way. Liquidity leaving the market does not mean the market is falling, okay? It doesn't mean this is people selling, okay? This simply means there is a lack of interest, okay? Money's flowing out. All right, money's flowing in. It's not money flowing out of an asset and into an asset, which means you can have green liquidity on the ribbon, okay, when the market is falling. It's just that this means whatever movement is taking place is going to take place faster. Now, one side of the ribbon is nice and solid. That means you have beautiful support provided the RSI is rising, or it means you have beautiful, good support while the RSI is falling. Now, when I say support, I don't mean longs. I mean you have nice, solid liquidity. Like they enter the market and just things are just really strong. Then it starts to taper off. That's the interesting part there. It tapers off. So this is telling you that the buyers, let's say buying activity was taking place here, right? The buyers are stepping out, like they're just letting the market breathe. That's what it's telling you, that before the other side changes color and there's a lack of interest. So if buyers decide we're going to start selling off some of our positions, then that means, okay, now we have a lack of interest, right? Again, buyers were really strong and then all of a sudden lack of interest, but they didn't start selling off their positions until here, okay? And again, I'm just assuming buyers are in, right? A lot of activity for the buyers, nice and solid, and then they started giving up the same time that they lost interest, right? They just started giving up. This red side means no one's interested. And now interest is starting to pick up, okay? That's what that means. This taper that's right over here, where it starts shrinking and getting smaller, leading towards the green side, that means there was a lack of interest, and now interest is starting to grow again, okay? That's what that means. So it very much works like the stochastic. However, it's simply telling you the breathe of the market, right? Let me see where this position is, because I think it's awful now, right? Nope. Yeah, it hit a bottom, went through liquidity. This liquidity is gone. That's it. Just want to see what's going on there. Okay. Now, let me just kind of leave this open and show you the other parts. Now, the Heikin Ashi candles are here because it's just nice to see them. And there's a very special thing related to the candles and the RSI. Okay. Something really cool about these two, the way that they work together. I haven't told you guys about this, but you're going to learn it today, right? So these candles are not colored just green and red just because they're green and red. If you'll notice, like these are red, but they're rising, okay? This means they're rising into resistance, okay? And this means, well, again, rising into resistance. So you don't have a good trend. The problem with Heikin Ashi candles and people using them is they're like, oh, if it's green, we're long. If it's red, we're short. That's not true. That's absolutely not true. That simply means that you have closed higher than the previous close. That's what green and red Heikin Ashi candles mean. So individually, the candles are trending in one direction, but it doesn't mean price is moving in that direction, okay? So you got to be careful with that. So if I turn off the custom colors, you're going to see that up candles are green and down candles are red, okay? That's just what that is. And that's for people who like using that, okay? And now all these candles are colored simply because they are bullish candles or bearish candles, right? Okay. Either they're bullish or bearish candles. That's all that really means. But I use this custom color, right, that I've created because it'll help you understand, do I actually have bullish movement or do I not have bullish movement? If I don't, then I don't really want to be trading long. Now, here's this sweet little thing about the way this works with the RSI, all right? Take a look. Let me make this a little bit thicker and just make it one color. So the RSI is like that. The RSI is now twice as thick. We're good. I want you to notice something here. Okay. A trend reversal happens in two steps. Okay. Because price action and closing candle, they have to catch up to each other, right? So let's say you had an uptrend, right? And then you get a pause, and then you're getting a downtrend, right? Then you get a pause and you get an uptrend. So what you're looking for is you had an uptrend, because again, it's a trending indicator. You had an uptrend. There's going to be a pause. It's going to pull back, not too far. Then it's going to pause. This is an interesting one. And then it's going to go up again. You want to know if this move down here is going to start again. Why? Because a lot of people try and trade the breakout. Okay, they try and trade the breakout. Just looking at the price action. They try and trade the breakout. Well, you can't get the breakout. You can't always get the breakout. You just can't do it. What you really need to do is try and figure out, is this pullback, like this pullback, is it over and is it starting to move the other way? If it is, then you can carefully start scalping long. So I don't want you guys to trade the breakout. I want you to get in early at the right time with a confluence. And I want you to start moving up with the price, right? That's what I want to see you guys be able to do. So that being said, I had to create a way for you guys to understand that the move was going down in the B wave, and now it's actually moving long. So how do you know what happens down here to start going long? Well, it's right here. Take a look at the RSI. You see how it's moving up? It's ahead of the wick of the candle, and then it's touching the wick of the candle. Okay, this means that this move up is ending. Then the RSI gets inside the candle. When it crosses through the body of a candle, this is resistance, all right? A reversal happens in 2 ways. Now, we already know overall price action is in an uptrend. I only want to look at that, okay? I just want to look at that. Price action is in an uptrend. So what I'm looking for the uptrend to have been taking place. I want the pullback to take place, and I want to get in somewhere down here to go long, right? That's what I said. So that means something has to happen down here to tell you you can start going long. So RSI moved up, crossed through the candle. You already know that you're somewhere at a peak in price, moves up again, crosses again. What you're looking for now is 2 steps. When the RSI comes down, you need the RSI to cross through the body of a candle, like on the downside. You need it to cross through the body of a candle and then end up in front of the candle, right? So crosses to the body of a candle, it's behind the candle on the bottom. I'm calling this behind and in front, okay? Behind, in front, okay? Crosses in through the body, gets behind it. It's not what you want. Crosses through the body, gets behind it. Not what you want. Crosses through the body, right? Crosses through the body of a candle, then gets in front. Then your next candle is larger than your previous. So you're good. This 2-piece combination right here is enough to tell you that this is the bottom of this B wave, right? Right? This is the bottom of this B wave. And you can start getting in, right? What did I say? I want you guys to find some way to get in down here. Find some way to get in down here and start taking long moves again. So if we take a look at price action, we're going to see that we had a move up and then down, and then somewhere over here, it started to switch sides. Like, because price action itself is going to be a little bit slower than what the RSI is telling you is going to happen. So let's just take a look at that. Let me just copy this over here. Oops, I don't want that. Do this over here. Let's take a look at this, right? And you see what happens? Down, pulls up, pulls down. We get that 2-candle reaction right here, right? And then the next candle is larger than the previous. So that's telling you have a larger spread here. So you have a larger spread here. You just want to see breaks of structure, right? And this ends up being a place where you can start scalping long again. That's how that works. So again, let me show you that, right? Goose, I'm sure you're going to like this one. Okay. There we go. Like I said, you need to have a 2-candle reaction, all right? If you're looking for longs, then you need the RSI to be moving up and then do a pullback. It's got to pull back to the downside. Then you need the RSI has to cross through the candle and end up in front of the next candle. Well, unfortunately, you don't really take the long here, okay? You're not really taking it long there because look at the size of this candle. It's not really much spread, not a lot of activity. The RSI didn't really move much. You need a candle larger than the previous. And you need the same thing on price, okay? Price has to have a larger candle. There has to be more momentum there, stuff like that, right? So if you consider this being an upward move in momentum, look at the length of that move of the RSI, right? If this is another move up in momentum, well, look at the length of this move. It's actually smaller than the previous move, okay? The range of this move is larger than the range of this move, and this move moves down, so it's no good. You want to be in front of your RSI, should always be in front of your candle, right? So this is resistance, and then it gets in front, and then resistance. All right, so now what happens? We're in the top side. The RSI gets inside the candle and then through the wick. Now here's the interesting thing about Heikin-Ashi candles, especially these. See this long wick out the top, long wick out the bottom. This is just major manipulation. I don't trust this as being a short. That's why I'm not really doing anything about being so far in the negative over here. I'm not worried about this, okay? So this long wick out the top, long wick out the bottom, I'm not doing anything there. I'm not going to worry about it. In my eyes, I'm just pretending like it just doesn't even exist right now. It's nothing, okay? Heikin-Ashi candles don't generally have long wicks at the top and the bottom. It's not how they work, all right? Excuse me a second, guys. There we go. So, Goose, I hope that answers your question, right? There's a little bit more about the kill zone. These zones up here, this is where you have trending momentum, okay? See, it's green here, and you're in a green zone. This is bullish momentum. This is bearish momentum, all right? So if anybody tells you the RSI is up here, it's overbought, you should be going short, that's not true. Why would you do that if you're inside of bullish momentum? That's just not true, okay? It's down here, you're supposed to go long. That's not true. This is all bearish momentum, okay? That's just ridiculous. So the RSI, okay, you guys got to realize the RSI is upside down from what general price action is doing. It's upside down, okay? So, there we go. Support is not at the bottom of the RSI. It's up near the top, okay? However, depending on the momentum and direction of the market, based on the momentum and direction of the market, that will determine, is this support, or is this support? All right, if you're in an uptrend, this would be deep support. If you have a medium trend, this would be support. And if you have a really strong trend, really strong trend, this is support until you get out of it, okay? There. But then when the market flips over, right, as the market is flipping over, consider this for a second. The market is flipping over, and it starts to ride flat for a little bit. That means you don't have support and resistance. They don't exist. Your support and resistance is now in here, right? So as the market's rising, this is danger, right? As the market's rising, this is danger. Support, really strong support. As the market is falling, danger. As the market's falling, right? Falling. As it's falling, danger. Support, midterm support, really resistance, resistance, midterm resistance, and really strong resistance. Now, I'm going to do one more thing for you here. Okay, let's just do this. As the market is rising, and this is with any RSI, okay, any RSI, because the RSI comes with a midline, right? Let me put that on. There's a midline, okay? But I don't trust that the midline is always at 0 or 50. I don't trust that. It cannot be. Because if the market was flat, then yeah. Think about that. If the market was flat, like if there's no movement in the market, then yeah, the midline is the middle of the RSI. But what happens when the market's trending? Well, if the market's trending, then the midline has to be somewhere else. You see how it moves around? The midline has to move somewhere. So this is a dynamic midline that's built into it. All right. Depending on the direction of the market will determine where the midline is. So if the market is in a downtrend, the midline is going to be below the actual midline. If the market's in an uptrend, right, it's going to be doing that. But you need to have buyers and sellers. This is where things get interesting. And like I said, if the market was flat, 0 or 50, the middle would be the middle. But if the market's rising, that midline becomes support because it's the bottom, right? If it's falling, the midline becomes the top, okay? And you see what happens here. The market started rising a little bit and it wouldn't get past these two midlines, right? This here, it wouldn't get through this. These two midlines, it wouldn't do it. Now this is doing it dynamically, so automatically. So over here, we have what looks like a small downtrend. Liquidity grab, setting up for New York. I'm just waiting for New York. Okay. But you need to have appropriate buyers and sellers in the market. So last thing here, right? This is also why I'm not worried about what's happening with the market right now. This is green, okay? But this line is red. What does that mean? If this is your bullish trending zone, right? When the RSI is up here, you're trending bullish. But this means buyers have stepped out of the market, right? They stepped out. You see how the zone is kind of big here and gets smaller here, but both lines are red. But if I look back further, right? Buyers stepped into the market here. They stepped in and then they stepped out. You see the color of it now? Right? That's what that is. So as the zone increases, what does that mean? Zone increases, more buyers are in the market. Zone decreases, buyers have left the market. So you have to read both of these zones together. You have to read them together. Because just because buyers step out doesn't mean sellers step in. All right? Just because the buyers step out doesn't mean the sellers step in. Okay? Here, the buyers stepped out. The sellers were in, and they were always in. They never left, right? Sellers were in the market the whole time. Okay? That's it. Sorry. I'm sorry. Sellers were not in the market. Okay? Got that wrong. This zone, this green zone, should have a green line. That means you have buyers. Red zone should have a red line. That means you have sellers. So it's easy to see like when the zone expands. Like, is this zone bigger than it was before? Well, it was bigger here. Now it's smaller. So sellers stepped out. It was small here and it got bigger. Buyers stepped in. Isn't it kind of interesting that the buyers stepped in at this point and the sellers stepped out later? And then they just kind of transfer back and forth, right? Now, the buyers are, the buyers are not in the market. They stayed out of the market. The sellers are in the market and the price dropped. But as the price dropped, the buyers stepped into the market, which means it's interesting price. Like this is wherever price is now, it's interesting for the buyers. Okay. So the short of it is the line should match the zone. If the line doesn't match the zone, then you have this zone stepped out or this zone stepped out. When it does match, right? This zone, they stepped in and they stepped in. That's it. So once you put these things together, right? These are a bunch of confluences that you can have. Once you put all these things together, you can realize, hey, I need to look at my price action and see what's happening, okay? And once I can see what's happening, then I know that I should be buying or selling. So, and we look here, we're in a downtrend. Sellers were in the market, buyers were in the market. So they're fighting between the two, right? But we're in a low side. What do you call it? See how we have the RSI crossing through the candle? So what we have here is what? What do we have? This is a trend reversal is taking place, okay? And over here, you had a trend reversal take place, right? And it would be a minor trend reversal, not a full-on reversal, okay? Don't think that just because you see this, that you have, don't think that just because you see this, you have a new entry. That's not the way this works. The way I use this is like this, right? I see this reversal taking place. We had a minor downtrend. The reversal's taking place. I'm going to look backwards. For the last time, there was a reversal. And I want to see what that price is. That means if I want to start going long, I need to get above whatever that price is, okay? And then I'll really be long. Anything else is going to be range trading back into resistance. This is resistance, right? So if I start going long, I'm going into resistance. Once I get above this price, I'm going, actual long. So let's take a look what's happening here. This price is here, right? And like I said, I ended up buying in. While it was too high, I didn't have my moving averages set properly. Okay. Oh, let me even make sure that I have this set up properly here. 14 period one here. Okay, got this. 5 minute for a 5 minute chart. 15:45. We're good. So we're sitting at support right now. The reason I say we're sitting at support, do you mainly use this indicator on low time frames? No, I do not. Are you talking about the kill zone? No, you can use the kill zone on whatever time frame you want. However, the minute you get over the minute you get under 1 minute charts, you want to move your Heikin-Ashi candles, right? You want to move the Heikin-Ashi candle to as high as 28. Okay, you don't really want to go above that, and that's just a strategy that I created for myself. When I get underneath a 1 minute chart, I'm setting the Heikin-Ashi candles for a 28 period. Okay, and then I'll observe the I'll observe the candles and the RSI. I'll observe them as moving averages. One should always be leading the other. Okay, if the RSI is 14 and the candles are 28, then the RSI should always be in front of the candles, right? Should always be in front of the candles. There you go. So, let's see what's happening here. As stated in a previous, I don't need this here anymore. As stated in a previous video, like I said, we got this little resistance level here. Let me kind of move this. Yeah, I already have this. So we're going back to our trading range. I think this is what this is here. Yeah, that's the trading range. Let's start trying to pull back into that. Very far away from the moving averages. Hitting the support moving average. I don't need this one anymore. That's already done. This one can also go. Price action has changed enough from that. Let me just kind of remove some things from the chart that I don't need anymore. Parallel channel. Not going to need that anymore. Let's see here. Right. Okay. Didn't make it above that. What was the level that pushed us to here? That's going to be this right here. Okay, so we got new support at this level all the way to. Give me a second to just kind of draw some things out here. Okay, new support to there. New trading range. Yeah, it's going to be a new trading range. So that being said, excuse me if it goes silent for a little while. I would normally have some music playing in the background, but YouTube keeps flagging me every time I put music on. I even have to change all the music that's in my videos. So all my new videos that are going to be coming out are going to have music that I create. I am going to write my own music, going to produce my own music, my own audio backgrounds and stuff like that. So yeah, that's it. So it would be a full-on coffee shop crypto production. And it'd be nice if I could make the songs like full-length songs, and you guys could actually use them for yourself in a playlist or whatever. No, you won't find them on SoundCloud. That's not going to happen. All right. Let me get a better setup for trend channel right here. So that's a new trading range. Let me wipe this out. If I want the 8 hour, I can always pull it up again. I'm going to show you where I get my 8 hour trend, my trading. I'll show you where I get my trading range from. I'm going to show you a little something. And it's based off of this. High time frame candle overlay, right? High time frame candle overlay. I'm going to show you what candles mean in a minute. What? They can bother me. Go away. My little momies here. All right, so we know we got resistance here. I want to find. There we go. Range for my channel. Got this one. Ah, there we go. That's why I can't see what I need to see. this is manipulation. This is all manipulation. So good here, not good here. Okay. Huh, interesting. I like the way that looks. Yeah, that's good. Mm-hmm. Ooh. Ooh, even lower. There we go. There we go. Okay. Give me a second to make a little mess of things over here. There we go. Okay. I'm expecting a big push down from New York session. I'm sure it's going to go, pew, you know, it's going to do a little something. There is liquidity above this level. That's fine. Yeah. Let's see where that goes. Oh my goodness. Wow, that's decent. That is decent. So there's liquidity above that level. Let's go here. Swing high. That is a liquidity sweep though, isn't it? Yeah, it's a liquidity sweep and it created more liquidity. I'll take that. Oh, this is going to be interesting. Let's see how well we push out. I want to see if we're going to get here. It's going to be tricky. I don't know if we're going to get here. I'm going to do a sell here and push down to that point right there. Okay. All right. So I wanted to find another trend channel. I would like to find a trend channel. Really want to draw one out on a larger time frame. Let's see here. No. Higher low. Gives me a nice break. Another break. And my last. Oh, okay. I see. We got one here. So we take this to here. Made a new low. Last swing high is right there. Right here. Okay. Right there is what I'm looking at. You guys can see that. Right, this one right there. No, actually, no, that's not a good one because this pullback doesn't break anything. This pullback breaks things. There we go. So I'm going to do there. Bring this down. There we go. Take this out. Take this out. There we go. So in the major trend, okay, what I was doing is I was looking at the two higher lows. Now, I don't want this as an original low for the trend because this is still the lowest low in the previous trend. The reason I say that is because of this. Oh, no, no. Ah, that's not what I want. What had happened? I hit the buy button and I didn't want to hit the buy button. What did it do to my order? That sucks. I'm going to close this out. Pain in the butt. Not what I wanted at all. I did that by mistake. That was totally a mistake. Let me see if we're... Give me 1 second and I'll get back into what I'm doing. That sucks. Okay, that's all right there. It looks like it's already at support, which is fine. Nope. Comes together. Nope. Nope. Okay. Possible to here. Okay, I'm going to let it, let's see. Yeah, it looks like it's going to run down to there. So let me, okay. There. Okay. I want to see if this is going to work out right there. Okay, just doing that. That's fine. I want to see how that's going to work out. I should get a bounce at this level. If I get a bounce here and it doesn't reach my buy element, then I'm going to get back into a long position. I got to find my place. Sorry about that, guys. So I was saying that why am I marking the channel out this way? I mean, look how price just kind of reacts to it very nicely. You have this downtrend taking place, right? Downtrend taking place. Can't really mark that downtrend too well in real time because it's just very steep. Okay. What I would do, however, is I would find the first opening price that breaks a swing. So this is not a swing because it's got nothing here. There's a swing here. Opening price breaks that swing, right? This one also breaks the previous swing. But this close is not above any other closes, right? See how this candles push down and they push up and they give a close? The close is not higher than any of these highs. Nothing, right? Pushes down, no closes higher than any highs. Pushes down, close higher than this high and this high. This one higher than that swing high. So this is the opening price that pushes down into a low, right? You need a pullback to the upside, right? That closes higher than previous highs, right? When you are looking at a trend, you want to look at the major swings. But if you're looking at a pullback, you want to find the minor swings. The minor swings are going to be the candles themselves. So this candle pushing up closes above here, all right? Sorry, a little bit too close. This candle pushing up closes here and here, right? Closes these out. This one opens here, closes here, right? Closes above that and that and that, right? And there's a swing high here, which is fine. It doesn't break above it. You're not trying to break structure. You're just trying to get a little pullback. So how did I get to this point? It was from here to here, right? So I'm looking to see if this price will push down below this low and this low. Let's see, push down without making a higher low, and it doesn't until here. Here's the higher low. So then here's the lowest close. That means this opening price that gets me here is here. So I want this line to cross through that open, right? I want to cross through that open there. So this is my trend, all right? That's my trend. I just need to find 2 points. So that's how I know this is my downtrend. Now, that being said, if this is my downtrend, I don't want this as the low for my uptrend because this belongs to the downtrend. I want the low that belongs to the uptrend. Here's a low. Here's a higher low. And a higher low, higher low, higher low, right? They're all higher lows, okay? So that means this is the first higher low, see? And then you got this is the first low for the next trend. Next low for the next trend, right? I think I do have it off a little bit. I should mark this and not this. Let me see how this lines up, right? We'll find out. Also, where's that price action? Did it find my bounce level? It did not. It went flat. That's fine. So that being said, I want to know where to draw my channel for the uptrend, right? So I found my downtrend. What I want is the last lower high in the previous downtrend. The last lower high in the previous downtrend, okay? And that's going to be right there, this level here, see? Like I said, it breaks highs going the other way. It makes this V shape, okay? There's this. Okay. These candles break these highs. You got a close here the other way. It's a bullish close, but it doesn't break any high. It doesn't break anything. So there's no structure broken here. This is just a continuation of the downtrend. That's all that is, right? So that means this level here, whatever this level is going to be the place where I put my channel, the top of my channel. See? And when you mark your channel, you have to wait for price action to play out. So I have a low, higher low, draw those out. Somewhere between these two, you should have a high that coincides with this. All right. So get one down here and one here. Okay. Now, since price action is just here, essentially, you're going to say, okay, all of this price is ranging. All of this is ranging. I don't have an actual uptrend yet, not until you're above this level. Because on a higher time frame, this is your downtrend, then the market's flat, and then you have an uptrend. So above this line is your uptrend. The minute you start getting back down to that line, you have a downtrend again. But just because you're in an uptrend doesn't mean you're fully up. Find the last time that you had candles breaking previous highs, right? So here again, candle closes long after a bearish candle. Doesn't break the high. Nothing happens here. Candles come down, closes, nowhere. Closes above its previous high, not above the other high. So you don't have resistance here either. There's resistance here, but it's not the type to stop price on the way back up. There's liquidity here, right? So I want to find a candle that breaks previous high and breaks a swing, and it doesn't happen until this minor uptrend, which is all the way up here. Now, if that's the case, then this is essentially like equivalent to the daily high, right? Almost, I would guess it's like the daily high. Extend it to the right. Let's go over here. Oop, wrong way. Got my lines backwards. So I'm using a high time frame candle overlay. I've created this thing, and there's a bunch of them. I just have this one for me. Here's a high time frame candle overlay, right? I have it set for 8 hours. I want to see the 8-hour candles on this chart, on any chart. I want to see the 8-hour candles. And with that, I want to see the highs and lows of those candles. Okay. There we go. So these are the highs and lows of those candles. That's it. So now you'll see the line, right? This one does not coincide with the 8-hour move, but that's fine. In the 8-hour time frame, this is resistance. This is the other thing I want to show you guys. A candle's high wick is resistance. Okay. The low wick is support. There. Just drawing the low wick. Then you got to ask yourself, okay, which, what do you call it? Which time frame candles do I use? Well, that depends. Like, how far back do you want to look at price action? It's up to you. It's totally up to you. You can set 15-minute candles. You can set daily candles. You get weekly candles, whatever you want to do. Now, if this is support, because it's the lower part of the wick, right? Upper part of the wick. Here's the body, and there's this, okay? So you see the candle? There? There. So if this is the support zone, and this is the resistance zone, then the other is the trading range. This is trading range. That's what that is. I don't even know if I have anything safe here. Resistance zone, support, resistance. I'll call this SR level. Okay, we'll just call it SR because it's support and resistance. They're all inside here trading. If you wanted to know about trading volume, like where people are getting in, where's the equilibrium, you want to know about it in here. You don't want to know about the wicks, right? You don't really care about that because you know that most of the resistance here, most of the support's here. You don't need to know anything else, right? There's a method you can use about these candles, all candles, to understand if there's liquidity or not, right? So this becomes the trading range. So if I draw this out, you're going to see price action moves kind of flat in here a little bit, but you're going to see stronger reactions here and here, right? So let's put the candles back on. There and there, right? So I drag this out. What do we get? Strong reactions, price having trouble getting flat, right? Price hasn't made its way back down here yet. Hasn't done that. But we do have this equilibrium level, okay? And, there's a lot on the chart. That's fine. But you can see, like, price is not really getting above this level. This is the 8-hour candle. That's an 8-hour candle, okay? And if it comes down here, you could say, hey, there's my support zone. And let me just kind of get rid of these now, okay? SR level. We'll get rid of that. We'll get rid of this. Okay, we don't have that anymore. I can look forward other candles. If I had an uptrend, where was my resistance? I had an uptrend going on. Where was my resistance? Okay, that's going to be over here now, right? The next bearish candle. I mean, I can see one. I have one here, but it's a really small body. And the body is taking place inside the range of the previous candle, right? The body is in the range of the previous candle. There. See this little doji candle? It's inside the range of the, not the previous candle, range of the previous wick, okay? So I'm not going to count this for anything. I don't care about that. This one, however, right? This closes below the low of the bullish candle, right? Or does it close? No, it closes at the low, right? But then that means all of this is support there, and all of this is resistance. Let's switch that up. And you can use that going forward. There you go. Now resistance also has this liquidity zone, which I didn't realize till now. So I can actually get rid of this. Ooh, this one. There. We put my regular candles back on. Okay, drag this out. Drag this out. I think we're in New York session now, right? Yeah, almost. There and there. So we're just hitting New York session now. Like I said, I wanted to get through this bounce level. I need to get a drink, by the way. Okay, now this support zone is, what do you call it? 8-hour support zone, right? And we're going to call this 8-hour. 8-hour liquidity. There. So New York is starting. We're probably going to see like a giant move somewhere, but I have a, a buy limit order here. I'm going to catch it back there. See how this works out. Oh, I'm on a 15-minute. I want to switch this out. Okay. Game on. 5-minute chart. There. Now, of course, now, see this long wick sticking out the bottom here? I don't need this anymore. And we know we're in New York session. That's fine. See this long wick sticking out the bottom here, right? I said I wanted to see about adjusting my candles, my trend channel appropriately. Let me turn these high time frame candles off. All right. The mistake that I made was this, all right? This open comes up here, doesn't give me a higher low. This open, however, gives me a higher low. So this is my actual trend line here. That candle. Not this one, not the low. So I need to adjust this like that. Let me just kind of get this out the way before I can't grab it. I want this candle here, the open of that candle. There. Okay. Now that should be my channel. Oh, you notice in the RSI, I should be in the high side here. And then I start getting into the low side of the RSI over here. All right. See how it's just kind of ranging a little bit? Right? All of this is range. Then it starts getting into the low side, right? Starts pushing into the lows. Right? We're in the lows. Down again in this strong low side, right? Now we're outside the channel. That's fine. I'm not going to really worry about that. Now I would need to draw out a new channel. If this is range, then that means this is range. So that's what? Okay, great. If price action is way over here, what was the RSI and price action doing? Last time, price was at this level. All right, I want to see what was going on. Was I at the extreme bottom? If I was, then this would be another extreme bottom. Even though price is at a different level, right? What was momentum doing, right? What was momentum doing relative to that level, okay? So what was happening last time? The RSI was at a bottom, let's say. Right? RSI is at the bottom, right? And the RSI is here. See this? Was long. Sorry. RSI was long. We had long momentum here. Okay. So I'm at a bottom. Last time it was at a long. So I must be in a downtrend, right? Now what happened the last time? I reached the maximum down here, right? Okay. I'm at a max now. Okay. So I'm hitting a bottom. So let's kind of move this out here. There we go. All right. And what's happening now? Am I hitting a bottom? No, I'm not. But what am I hitting? Like, what's going on here? We had a top here, right? So you have a divergence on this point. I like divergences because they could tell you a bunch of what's going on in the future. Divergence doesn't mean you just go short. Not at all. Let's see. So I want to find a divergence over here. Right? Got one. Oh, that's not it. Sorry. Just want to see if I have one here. Thought I did for a second. Okay, we're good. We're good. We're good. Yep, nice bit of price action. I like divergence on higher time frames, though, is what I want to see. Let's go to the 30-minute. Oh, geez, that's huge, huh? I'm looking for a hidden divergence right now, actually. There we go. There's the hidden divergence. So we have a flip zone here. Hidden divergence, all right? Okay, this is a bullish continuation, hidden bullish divergence, right? And that's going to get me off of here. Let me see if I pulled the wrong one here. Oh, sorry, yeah, I did. I marked the wrong one on the RSI. There. Okay. So we have a hidden divergence here. Okay. Which is this, right? Now, the interesting thing about a hidden divergence is a flip zone, right? So if the RSI broke over its previous high, right, moved up, broke its previous high inside of a hidden divergence, okay, that means the support. This is a good support level. You want to get to the open of the candle, okay? And then it ends over here. Just go to the close of the candle, right? This is a flip zone. That is a flip zone. I don't think I was able to name this one, so let's give this one here, right? Hidden divergence, flip. Hidden divergences matter later. They don't matter now. You don't care about them now. So it kind of drives me nuts that people are like, oh, divergence indicator is not working well. It plots too late. You're just doing it wrong. That's the thing. You're doing it wrong. Divergences are not for now. They're for higher time frames and to use them later. And I see your message. You struggle with divergences. Never work out great for me if I trade them. Yes, Goose, I'm going to tell you right now. Okay, I know exactly why they don't work out for you. You're suffering from the same problem that a lot of people are suffering from, right? You got a low here, lower low here, and a low here, higher low there. And you're thinking immediately, I have to start trading long. That's not so. For you to see this, right, price action would have to play out several candles, okay? Because if you're using a divergence indicator, you have to wait. You have to wait for it to tell you. Well, you really got to take your time and look for the divergence. That's it. I know you struggle with it, but it's fine. Everybody struggles with it. I struggled with divergences for a long time until I realized I'm trying to look at them on a small time frame, right? It's not the way you want to use them. So you see the divergence here. Why do I say you see the divergence? Well, because when the RSI was here, right? When the RSI was here, it had a value. Okay. And my price was there and it had a value. Right? You can see that I'm below my price, but the RSI is not below the low. Right? The RSI is not there. That means that you don't have to wait for here. You can see it here. You have a divergence. This is a divergence. That's it. You know you have a divergence. Stop waiting for the indicator to tell you. Just use your eyes. That's it, right? So now the question is, what do you do with that? Well, I'm looking at it on a 30-minute time frame, okay? Now, the problem is you have to wait for price action to give you a lower, you need a lower low. If your divergence, if the RSI, right, is giving you a higher value, right? There's the higher value. Here's the lower value, right? You're waiting for price to show you a lower value. The RSI already gave you a higher value. So price has to make a swing low. You just need a candle with a low that's lower than the one on both sides. You need a V shape. You don't have it yet. Don't have it yet. Now you have it, okay? Here's a low. Here's a low. Here's a low. There's your V shape. That's it. There's your V shape. That's all you got. All you need is this many candles in this particular case. And if you look, right, the RSI never came down to that level. I don't need an indicator to tell me that. Just look at the chart, okay? So now what do you do at this point? Well, this would be a bullish divergence. So that means this is a support level. And this is what this means. You can mark this out, all right? You do not want to trade long until you get above this level, because you need the candle that got you into the divergence, right? You need the candle that got you into the divergence and the one that got you out of the divergence. You got into a divergence, you got out of a divergence. A lot of people use an indicator and they say, oh, here's my divergence. No, your divergence was back here. This is where your divergence was, because your price is lower than the RSI and price. Your divergence is here. But the indicator takes this long to find it. Don't use indicators for divergences. That's why I didn't put divergences in here. It's useless inside of an indicator. Use your eyes. It's very simple. So now, what are you doing with this range? I drew a range from one end of the divergence to the other. So what do you do with that? Well, you can range trade in here, okay? Go in a very small time frame and scalp. Or you can wait for price to get above this level, and then you start looking for long positions. Listen to what I said. Wait for price to get above it, then look for long positions. Wait for them. Don't just take them. Wait for them. Only after price crosses above this level. So let's let it get up there, right? See how it rejects that area? Where did I get this area from? You see how it's rejecting this? And it takes a breakaway candle to get there. At the same time, you'll notice that the RSI, what is it doing? It's getting into a bullish trending zone at the breakout, right? That means the move took place down below somewhere. What did I say about an RSI that cuts through the body of a candle? Cut through the body of a candle, body of the candle, in front of the candle, okay? Now, if you want, this is really going to confuse you, right? Ready? There's the close of your candle, right? Where the RSI ended up in front. Where's the swing low? Right behind it. Use the RSI formula. That's the part that you're confused on now, right? Use the RSI formula. Okay. I have a video in my channel called the RSI Formula Explained. And yeah, you'll be able to see how far the market is supposed to move, okay? So the RSI value here is 2.83. That means the price action should move 1 to 2.28. 2.28, all right? 2.28. Am I reading that right? Let me see here. 1 second. 2.28. Yes, that's correct. Price action should move. Oh, I'm looking at the wrong part of the RSI. Down there. There we go. That's it. There. Okay. 2.28, right? There. That's how far price should move. All right. That's the top of the market. That right there. All right. Let's let this play out. Letting it run. Hold on. Because I remember where it went before. Didn't get there yet. So the market still has to move to this point. And that's all based off the energy that was created in this move back here. Okay. So, like I said, you are not trading longs for bullish divergences until you get out of the divergence zone. Here's the zone, right? From here to here. And you only look for long positions above it. Well, you can't take a long position here because you just broke the swing. You need to pull back, get more energy, and then go long again, right? Come up here, break the zone, no good. You get a retest of the zone, retest of a trend, right? Now you're looking for long positions, okay? But again, I'm on a 30-minute time frame. So I really just wanted to find the divergence on a 30-minute time frame just to want to see where it is. So here's the hidden divergence. The market should flip in this place. All right, let me go back to my 5-minute. Hidden divergence in here. Hidden divergence means there's a lot. So I'll put it this way. This was a, what was it? It was a hidden bullish divergence, right? So that's what this was back there on a higher time frame. That means a hidden bullish divergence is a continuation trade. That means there's more bullish activity taking place in this level. Like price is coming down into this level, a lot of bullish activity and going up. But a hidden bullish being a continuation trade means that at some point in a high time frame, the market went up, came down, and made this bullish support move, and then it's, wants to move up again. It's looking at this. Okay, it's looking at this activity. There's no price breaks of structure, nothing like that. It's just telling you there's a lot of support at that level. So you have support at this level. That's what that's telling you. All right. So I'm just kind of looking down here. I want price action to come low, right? And I want to get it for long positions in this level. Now we do have liquidity above, right? Was not fully swept, hasn't been fully swept yet. So I'll be targeting this. Now, if that's the case, I want to see, where's my, yes, kind of go here. I want to see my stochastic. I'm on the low side now, but I still have all this bearish energy, right? All this bearish energy right here. See, I can't take longs yet. Coming down into this hidden zone, can't take the longs yet. This is strong. Dark red means a lot of resistance. I want to see green, dark green. I have to cross through zero, get some dark green up here, and then I can start taking long. So I don't have what I need yet. It looks like the session opened up. Pre-market orders came in. Everything just kind of, took out previous liquidity that was generated. And yeah, so I'm just waiting for another move. In that case, I'm going to go get a drink. Say what's up to Momi. Maybe she'll join me in the chair. We'll see. And yeah, I'll be back in a few. So hang tight, peeps. on. Here we go. Hope my audio is good for you guys. You know, I'm very particular about. There we go. Let's do this. I'm very particular about how good the audio sounds, right? But I haven't heard any complaints, so I'm guessing everything's doing well. And I just realized while I was getting a drink that I completely forgot to tell you guys something about divergences. Thank you, Goose. In particular, hidden divergences, right? So hidden divergences have 3 zones. They've got 3 zones, okay? I'm going to do a full-on video about this later today and upload it for you guys, but I'm going to give you the synopsis, breakdown, whatever, short one, short version, right here, okay? So I drew out the hidden divergence, right? Let's go back to the 30-minute. Hidden divergence actually has, you know, let's go and find that again. Let's just go and find that again. There we go. Okay. Come up here. Hidden divergence right there. Yeah, it's showing up here too. Cool. In the stochastic. All right. Oops. Do this. There we go. Now, right here. Now, where did we find that divergence, huh? I don't need this anymore. Let's fucking go. What's up, Nor? Hey, Nor, if you want me to... Nor, let me know if you're good to get into the chat on audio, because I could pull your audio through here. We could sit in the Discord chat and I can get your audio through here. You just let me know if you're good for it. If not, like you're tied up, it's fine. Anyway, let's get rid of this. And by the way, when you said LFG, I thought you were like talking about a fair value gap or something. Sorry. All right, so we had a hidden divergence, right? You can see it here. Bullish one takes place, right? Hidden bullish divergence. You got this here, right? A little bit. Chilling here, about to eat some... Jesus Christ. Oh, it's morning for you. Like, I just started like 5 hours ago. Sorry. So we got this hidden bullish divergence showing up right here, right? Not much of one, but it's still decent. So the thing is, when I'm done with the serial, I'll jump on. Deal. I'll pop over. Shoot me a message and let me know when you're in your, what do you call it? In the room, right? And jump inside of my live chat, not the Zen chat. Okay. Let me just, give me a second, guys. Let me just make sure I can get all this worked out here. There we go. So if we go pull your audio through there. Anyway, so we got this hidden bullish divergence, right? I don't know, buddy. Yeah, but I got up at 3 o'clock. It's now 8 o'clock. Hidden bullish divergence is here. I'm just gonna mark this up. Right, hidden bullish divergence. So in a hidden bullish divergence, you need to figure out, like, how did you get to this zone? Like, this is one little part of the zone. You need to know, how did you get to this zone, right? You need to know the high and the low of that zone, okay? So a hidden bullish divergence takes place inside of another zone, right? So your high is here, your low is here, right? There's your high and your low right there. So luckily, this hidden bullish divergence takes place inside of its own zone, which is here to there. See, you see the zone right here. Okay. And this is the high point, pushes down, gives you support. This comes up, gives you, right, support at this level, pushes up. So this is the zone. Like this low to high is inside of the most recent low to high. What is the most recent low to high? It's right there. So you need to know those values. Okay. That being said, I'm going to take this, copy it down, go right below it. Okay. And I want this low. There, right? That's hidden. I'm going to go to the top of the zone, go right there. And I want that high. There. So this is going to be the most active support and resistance of your hidden divergence. Okay. And it's on a 30-minute chart. So I'm going to change this. Hidden bullish divergence. This becomes, watch this now. This becomes support. And this becomes resistance. This is why I say a hidden bullish divergence is a flip zone, right? Usually you have, there we go. Go away. Usually you have what? You've got support, right? You've got resistance. Okay. And you've got price action in between, right? You got resistance, support, resistance, support. And that's what they do, right? But in a hidden bullish divergence or a hidden bearish divergence, either one, hidden divergences, they are flip zones. That's when the support, that's when the support and resistance actually flip over. All right, they're upside down from each other. Okay. And the way you work with them is that, let's get rid of this. The way you work with them is like this. The hidden divergence takes place somewhere. You mark out the high, the low, and the zone, right? And you drag them forward. Okay. So now you can see that your support is actually above you. So when price gets out of the divergence zone, which is here, right? The divergence zone, if it makes its way up into here, now it's got support. But if it doesn't, and it makes its way down here, now it's got resistance. So how do you know where the good side is? Well, resistance has a very strong top, and support has a very strong bottom. That's how that works. Support and resistance have flipped over each other, and the resistance has a strong top and a weak bottom. The support has a strong bottom and a weak top, but they are upside down from each other. That's the key thing you need to remember. Okay. So put this over here. So we'll get rid of that. Let's go back to price action. Okay. And this is going to be, I'm going to do this here. I'm going to make this a new support zone because I didn't see the hidden divergence before. And this is going to be resistance. Okay. Resistance there. All right. See, we still haven't gotten to my levels, right? Right. I want to get in here and I want to get in here. I want to do that. But so this is an 8-hour support zone here, according to the candles. Right. But in that support zone, you can see you have what? Things are in the right order, right? They're in the right order. What do you have when you have support? Your support's down here, right? There's support here. Get rid of this one. That ends up being your support, right? Support's at the bottom. And resistance on the top, right? That makes sense, right? Resistance on top, support on the bottom. Well, the market's flipping over. So if it comes down through resistance, it's going to fall to here or go to there. And that's it, right? But this is your divergence zone. You need to get through this. And what happens if you break above this divergence zone where you're going up to support? You have support here that taps into liquidity. What do you have after that? More resistance at this liquidity level. Okay. So It's what, 7:41, 8:41 in New York right now. Is that right? Yeah, 8:41 in New York, I think. Yeah. We'll see how this works out. Yeah, we'll see how this works out. So, just kind of flat right now. Come back down to the 5-minute. Let me squeeze these out. Good. Don't need this. We're good. Instead of using a channel, I'm just going to use a trend line for myself. We have a changing character here, right? We got that. Can there be a divergence in liquidity or vice versa? Liquidity inside of a divergence or a divergence inside of liquidity? Yes, there can be. Absolutely. Liquidity can exist anywhere on the market because, what did I just do here? Liquidity can exist anywhere on the market. There we go. On the chart. There. Liquidity can exist anywhere on the chart, okay? Because liquidity is generated to move the market. So if you have a divergence zone in the past, that means the attempt was already made on the market, okay? Liquidity happens later on if the market has already exhausted all of its current liquidity. Not all of it, but it needs more, right? Liquidity is generated by banks and institutions as well as stop losses that need to get attracted. And eventually the market ends up just kind of scooping it up so that it can make further moves. Now, it sounds kind of, autonomous when I say it that way. The market generates liquidity so that it can move some more. It'll come back and it'll attract that liquidity. No, it's major players that are inducing people into liquidity areas. For example, when you get, I drew this out just now. Let me kind of alter my chart a little bit here. Let's change my colors. There. Nope. Yep. Maybe. So my screen's not as black as it used to be. That's weird. I don't know why it's doing that. I know TradingView made a little change in their whole setup overnight. So, for example, high, low, lower high, higher low. This is not a lower high, right? So if this is not a lower high and this is not a lower low, like see, we got a changing character, comes down, makes a lower low with a lower high. This is resistance, right? Let me play this out for you and we'll get to this in a second, okay? There. So you came from a high and broke an internal low and an external low, right? And then you made a new low, right? So that means this high broke lows. So this is a high. And this is some breathe in the market, pushes up, and it breaks its own low again. Okay, so this is a high. This is the last high that I see that's relevant. So I'm going to mark this. What I'm doing is I'm showing you an inducement area, okay? I'm going to show you guys an inducement area. So the market pushes down, and then it starts breaking above this previous high, comes up, and it breaks above this previous high. Okay, this that's happening right now, this is an inducement area. It's making people think that the market is going long. Why? Because it was in an uptrend, came down, gave you a change of character, right? Change of character to the downside, but then it changed character again and went to the upside. Changing character, okay, changing character always happens right in between an inducement area, okay? Changing character is always the connecting points. If you look in between a change in character, there's an inducement area. You have to read the inducement and understand, is the market actually going long or not, or short or not? That area, right, the points that start change of character, those are the places where you look for liquidity, okay? So that being said, you have a low that breaks a high, so you have support here. This is good support so far. But when you get a change in character, you need to have higher low and a higher high. You need to have both, okay? So let's take a look here. Right? See this high? You see how it's not broken on the right side? But then the price comes down anyway? So you probably have a divergence here too, okay? Let's take a look. We probably have a divergence here, which means this is not an uptrend. Let's take a look. There's your, nope, not a divergence. Okay. Heikin-Ashi candles saying that it is. All right. But it's not it's a higher high, but it's not a close above a high. That's right. Otherwise, though, super helpful. See the techno is live. Catch you on. Good deal. Thanks, Hughes. Hey, what's going on there? Sorry, I got some messages I got to check. Give me a second. Okay, good. I'm going to see if I can open my microphone in the other chat room as well. Not sure. We'll find out. Back to my chart. So you get a low, right? You get a high, makes a low, high, makes a low. So there's a break of structure here, break of structure here, comes down, does not break structure. Okay. So how is it you have a downtrend here, but then you don't have a downtrend here? That just kind of suspicious, right? This is the inducement area. Okay. It's making people think going long, and then you're going to start going short. Okay. So you want to look for the liquidity that was in this space because you changed character here, right? And we also changed character here, right? Look for the place that caused inducement, and you will find the liquidity, right? It's always before the change in character. If you get a change in character, right, look behind it, okay, at price action, and you'll find the inducement area. So change in character here. Let's look behind it. I want to find a place where a price action pulled into a direction and it did not break structure before making a swing. Okay, cannot make a swing until after it breaks structure. So there isn't one. There isn't one here. This is all nice, good price action. So I'm looking back further. Right. Okay. Let me turn off the text over here. I don't need to see that. There. I'll put it back on in a second. Oops. There. So looking back here, this is all good, right? We had an uptrend taking place, right? Up, down, breaks a high, swing high. So there's a low here, makes a swing high. Low makes a swing high, comes down again, and then makes a higher swing high. That means this swing low, right? This is good. This has this fine. We're fine here because price was able to just go up and break swing highs. But this has a swing low, right? Swing low, did not break the swing high without making another one. So that means your liquidity is here. There. You're going to go from the low to the lowest open that broke a swing high. See the swing high here was broken by that candle. This is a breakaway candle, breakaway gap, right? So you're going to go right down here to the closing value. There is liquidity here. Okay? And that's because you had a swing low that made a swing high, but the close of the candle didn't break anything, although it came down and gave you a higher low. So that means you have liquidity below this low, not below the other ones. Like, I don't understand why people keep saying liquidity exists above all highs and lows. That's crazy. Liquidity can't exist above all highs and lows. That's just nuts. Because they're like, oh yeah, swing highs and swing lows. Okay, if that's a swing high, that's a swing high, that's a swing low, that's a swing low. Okay, great, no problem. What about the individual candles? Aren't those swing highs and swing lows too? Like, aren't they? That would make sense, right? It's not like they only exist on a 5-minute time frame for extremes. or only on a 1 hour time frame. They exist on all time frames. You just need to be able to find out. You need to be able to delineate which ones have the actual liquidity. So I got this one marked out. I want to find another one, right? Swing high, swing low. The swing high did not break anything, didn't break this. So that means, so there's a swing high here, right? Came down and made a swing low. That means, what do you call it? This swing high, it's got resistance. The swing low was not able to push price up high enough, right? So I want to look from here to the lowest open again. So I go from the swing low to the lowest open right there. So you get liquidity here too. So that's what I'm saying. This is how liquidity exists on all places in the market. And then the liquidity is no longer there when it's swept. That's how that works. Okay, that's just how that works. So the reason I'm doing this is because price is in what looks like a downtrend now. I want to find the uptrend that left liquidity. So if you have an uptrend, every one of your lows should break the previous swing high. If your low does not break a swing high, but it makes another swing high in the process, then there is more liquidity below the low. That means, well, for example, here, this opening price with the low, there was enough force here to break the previous range, right? Break that previous range. That means all the orders were used that were supposed to be used, and they were able to do it, right? So you got this. Goes up and makes a swing high, but it doesn't break anything, right? The close doesn't break anything. That means you have orders still left here that need to be filled so that they can break the swing high. Well, that happened on these candles. But this move, right? This move broke the swing high. Great. This move did not break a swing high. So there's orders here that did not break the swing. It didn't break this downtrend. The orders that were filled here was not enough. There's still more orders here. That's what you're doing. Liquidity is more orders. So you're going to go from the swing low, right, to the lowest open that broke a swing. Here's the swing, the previous one that was broken. It was broken by this open. You're going to go from here to that open. That's it. All right. So now, if I drag this out, it's swept, right? It's swept. And then this one has been swept. So these liquidity levels are gone. They're gone now. That's it. So this is where liquidity was left in the market. This is the liquidity that still attracts price. That's how that works. There we go. Let me see here. Right there. Over here. It's kind of checking my stuff out a little bit. 1 second. Yeah, we're good. Oh, there we go. Where's my stuff? Oh, okay. Thought I lost my indicator for a second. Now, generally, that's how I trade, right? I'm looking for liquidity. I want to find out where it was. There we go. Yeah, I want to put this here. I just want to. There we go. I want to put this here just to put it here, just to have a little fun with it. Okay, the dynamic range smooth moving average. This is awesome. I like this thing. If it turns red, what, right? If it turns red while price is above it, you can expect price to come back down to that liquidity level right there, right? If it turns green while price is below it, price will come back to that level. And it works great when you're very far away from it, okay? Price comes back down to this level. Look where we are now. Back to this level where we are now, right? Okay, this was already swept. So this is a dynamic range moving average. I'm going to alter the name and just a little bit more stuff to it. But it basically tracks liquidity automatically going backwards in the market, right? And you just have to see like when price has reacted to that level. That's all. It's going to be a really cool tool. I like this thing. I'm going to use it and filter it inside of another indicator. But I will offer it to you guys for free. You'll be able to use this moving average and mark out your liquidity levels automatically, you know. And like I said, we had liquidity here. The liquidity is actually down to this point, right? So it would be the lowest open. I like going to the lowest open, but it was actually the lowest swing, which is down here, right? That'd be the lowest swing. The moving average, it's smoothing out the liquidity. So if I just drag this out to where it said the liquidity was, we could take a look and see that that wick came right down to it, right? And then this one, where it said the liquidity was, it's not this candle, it's this one, right? So it's the next candle, okay? And you can see it's still sweeping that one. So this is a really cool like liquidity tool to let you know when stuff is left behind in the market. And you set it for as far back as you want to look, right? You want to look 20 candles, you want to look 14 candles, whatever. And that's probably why, you know, I have mine usually set for 14. This one's set for 20. That's why it's got a couple of extra ticks left in the move. Sorry, just looking outside. It's been raining for like 3 days. Question from Nor. Let's see. I have a question on liquidity, but my is about to meeting. Also, I have to think on what I have to say. All right, buddy. Whatever you got to do. I'll be here for a while. Let's see what's happening with price action now. I'm getting rejections here. Price was able to push lower. We're inside this liquidity area. What I like is this. Like, you see how liquidity came all the way down here? I want to push down to there. Let me just kind of put this on the bottom. There we go. Yeah, what's the temperature? See, Nora lives in a different, little different area than I do. So I just want to see what the temperature is outside. I'm probably staying indoors all day today. It is, yeah, it's 60, right? There you go. Yeah, it's 60 degrees, pretty much. There you go. All right. So anyway, 60 degrees. Yeah, I'll probably go out to the gym for a little while when I'm done with this. Let's see where we are. Okay. So we got some reactions right here, right? We got some reactions right here. Ended up in front. Sellers are stepping out. Buyers are still in a little bit. I'd like to catch this. I want to catch this. Let me grab this little business right here. Right. Just a little bit right there. Take that one. Okay. I'm going to take that little piece right there. I forgot to check the liquidity, see if it's stepping in. And what we have? Yep. Yeah, buyers are like activity starting to come into the market. Yeah, Nor over at my mother's place. It's I think it's like 20 degrees. Not cool. Let's see what's going on here. Yeah, so we're good here. I like that so far. Let me see what's happening right there. I just like to open my indicators once in a while and just kind of confirm things that I see. Yeah, so this is rising into resistance. I shouldn't have taken this trade just yet. It's not really a good move to take. We have a divergence that's forming out. That's right. Yeah. So we have a divergence that's forming here. I could tell because like these are higher opens and higher closes of the candles. Just looking at the candles, not the wicks, right? But at the same time, you see these long reaches for liquidity, the highs and lows, right? The only real structure that I see is to the downside right here. So it's still pushing short, probably still wants this liquidity down here. That's fine. Let it run. And I'll take this little long piece right here. Let's see what else we got going on. Yeah. Let me see if there's any liquidity left below or above. What should we go for? All right. Give me a second here. I'll be right with you. I'll be with you. Just want to examine my chart for a minute. Okay, good. All right, we're flat. That's a pullback. End of the pullback. So where does the pullback begin? Okay, good. right? That structure to the downside. Good. Here's the pullback. There we go. Yeah. Re-entry right here. Okay, so yeah. I'm still in a downtrend, trying to go long right now. Just a heads up. In a downtrend going long. And this is just a sim account, if anybody wants to know. These are not real trades. You can see this is on Bitcoin right now, and it's on the Bybit exchange. And this is just paper trading right now. I really wanted to put this together for you guys to give you some price action analysis, just some TA of what's going on. Let me just kind of take a look at these individual candles, right? So here's the low. We get a break of the low, right? Here's the high. No breaks of the high. No break of the high going all the way across, right? No highs being broken going all the way across. But here's a low, here's a low, here's a low, here's a low. Low being broken again. So we have resistance here, right? Let's kind of get rid of this. We don't need the change of character anymore. Change of character played out the way it needed to. That's fine. So you have a low, gets broken to the downside. You have a high, doesn't get broken. Low, gets a wick, makes a new low. Highs, not getting broken. No highs being broken. None. But you do have lows getting broken. However, I do see that momentum is rising here. It's rising in a pullback, so I'm not really feeling like it's a divergence now that I look at it a little bit deeper. Between you and Merv, I am learning TA, which I never knew where to start. Oh, good, Nord. It's nice to know. Technical analysis is a key player in the beginning of any strategy, okay? At the beginning of any strategy. Key player. I really feel like there's a divergence here. I just completely do. I don't know why. Let me see what we got. Yeah, there is a divergence going on there. It's just playing out real slow. I'm not sure why things are so slow right now. It's 9 a.m. in New York. I don't know if there's any. Nor, give me a heads up. I don't usually check for news. Let me know if there's an announcement taking place in the next few on the NY. All right, just drop it in the chat for me. Appreciate it, bruh. Appreciate it. Get this here. What do you have here? This is my what zone? Yeah, support zone. That's what that is. Here. Make that a 1. Dark green. There we go. Thanks, buddy. For those of you who don't know, Nor is a good buddy. Talk to him a few times a week. He and a few other people. Some of you. Okay, GBP and CAD news. So GBP is probably why slow on the market. CAD news. I don't know that CAD news is going to have really amount to much over the next few weeks, right? I'll take it for what it is. I don't play the news, but I do like to know when news is taking place, because, you know. Oh, thanks. Nor just dropped something for me. Can I be the GBP? Yep. CAD news because you wanted to. Yep, got it, Nor. Thanks. Oh, there we go. Fear of my cash is today. Fear of FOMC. Yeah, I'll probably be out of the market by 10:30. So that's fine. Again, this is just a TA day. I think I'm going to jump in and do some of the Asian session tonight on a live account. So that'd be good. There we go. Need to spend some time in the gym today. Get my house in order. Work out some more of my stuff on my desk. Jay Nor, you see that little image I dropped in the chat for the new office setup? Really like it. Good digs. Good. You'll be on for Asian market. Nice. So like I was saying a minute ago, we're getting breaks below lows, but no breaks. What do you call it? No breaks above highs just yet. So it's still showing that even in the interim, in the short term, still in a downtrend, right? I got nothing on this moving average here telling me anything else. Thanks, yeah. A little bit more to do. I want to hide the wires under the desk. Sorry, just getting off into some sideline conversation. This is what we do in the chats when we do lives, do live streams. So this is a live stream. Just deal with it, right? There's some wires and stuff under the desk. I want to hide those. I like the fact that I can have the desktop like turned sideways because I got lights built into it, and I can actually face it out to the room like it used to be. The computer is always facing the wall. Like it's always annoying, right? And I don't like putting, it's for you PC people, for your Windows computer people, do not put your tower on the floor. For the love of computers, do not put them on the floor. They don't belong on the floor. Put them on a shelf inside the desk, and a little pocket, put them on a plant stand, whatever. Get them off the floor. Especially if you have like a carpeted floor, you're killing that thing. It's just sucking in all the lint and dust, and especially a lot of the static electricity. Take your computer off the floor. Put it on some like shelf, some piece of hardwood, a plant stand, a couple of plant stands, some stool, whatever. I don't care if you put it on a box, whatever. Get it off the floor. Doesn't belong there. Never did. All right. That's why they're called desktops. All right. If you put it on top of your desk, it's fine, but pretty it up. I want to see your setup. That's what I want to see. You know what I want to see, guys? I want to see you guys go to coffeeshopcrypto.net and go into the community section and take a picture of your setup with the, with Coffee Shop Crypto on the screen, and just drop it into the community. Well, I don't care. Start your own group, start your own thread, whatever you got to do. All right, I want to see that. All right, so long positions are triggered. Never hit my other order, right? Is that what it? Yeah, never hit my sell order here. Took my long and closed it out. We're good there. It's wiping out. This liquidity is gone now. We're good here. Laptops on the laptop and Asian on the. I can't say it. I'll get canceled. Wow. Okay. Yes, you do, Nor. You have a bar in your desk. That's right. All right, so we got a little divergence playing out over here. I'm concerned at like which part is the actual good part of the divergence. I want to take the whole thing here. Need to get into. So we have a change in state. Nope, not a change in state of delivery. Oh, we do have a change in state of delivery. Look at this. Here we go. Change in the state of delivery right here. This is going to be the flip zone of my downtrend. If I can get above this is going to be really good. Can I join a Discord group? Sure, John. Go ahead and join. The link is in my website, right? Here, let me give you this. 1 second, John. John, go to and roll over community. The Discord link is in there. I'll show you what I'm talking about, John. All right, I'm even gonna drop a little image on my screen right here. Doop. So there. All right, John, I'm gonna put something on my chart screen, okay? For you, my buddy. There. If you got a mic, you could always turn it on too, right? Here you go, John. Take a look at this. All right. Should be able to see that. This is the Coffee Shop Crypto website. If you roll over community, Discord shows up. Okay? Just click on a Discord and it should bring you right to it. Let me know if it doesn't. I think I made the link permanent. So, it's always there. Okay? That's it. There you go. Did you get that? Sorry, I deleted it. My bad. There you go. Okay. Yeah, you got it. Okay, good. And like I said, if you got a mic, go ahead, jump on. I like having people on board. It's good. There we go. Oh, yeah, there we go. I see you joined. Yeah, there's a voice channel called The Coffee Bar. You just jump in there. Anyway. Give me 1 second, guys. Run through some other things here. Yeah, I don't think so. They're missing the point. Okay, there we go. Can't do mic at the moment. Doing a little accounting work. Got a person in the office. So you got a person in the office with you while you're at work and you're chilling watching a YouTube channel. You're great, buddy. I like having you as a subscriber. Thanks. Now hit the like button. Help me out. Yeah, guys, by the way, I noticed one of the videos that I put up recently has like 700 views, right? Oh, good for you, John. I noticed one of the videos has like 500 or 700 views, right? But it only has 20 likes on it. What's up with that, huh? You go and you watch the video and you don't click the like button? Come on. You help me out here. Help the algorithm. That's really what it's for. Because I notice a lot of my videos are not getting a lot of referrals, right, so to speak. They're not being pushed. The algorithm is not pushing them into your feed. So sometimes you won't even know that I put up a video, right? And I'm trying to reach a wider audience. It'd be good if I could do that. I'd really like it. Thanks. Reading your message, John. It'd be good if I could reach a larger audience, okay? It's not about getting paid from YouTube. I'm going to be honest with you guys. YouTube sends me maybe like $100 a year. That's it, okay? I don't do this for money from YouTube. Not in the least. Not in the least. They pay me like $100 a year, okay? It would be more if there was more subscribers and more people watching. But I do this because I don't like you guys finding these silly YouTube tactics that I keep saying. I'm going to call them clickbait things. I don't like the fact that you guys find those things and think that that's how you're supposed to trade. No, that's not how it works, right? Look at an indicator. When it says buy, you go and look at your price. If it's above the moving average, then you buy. That's backwards. It's so backwards. It's just completely wrong, right? That's not how it works. Absolutely not how it works, okay? So, I'm going to get into I don't want to get into a position here. I'm going to get into a position here. That's what we're going to do. Yeah, they're going to go for this liquidity. They're going for the liquidity. Absolutely going for it. There we go. Or change this, get more viewers. But as we know, there are some crazies out there. Yeah, I know there's crazies out there, and one of them runs this channel. Just a heads up. So, what do you call it? No, it's just that the separation of the two, right? It's so huge. Like it's 100 to 1 essentially, right? Or 10, it's 10 times. It's 10 times the difference. Like 20 people like the video, and it was a strategy video, like that people jumped on it right away, right? It was the Takashi strategy, okay, which I'm not using today, and I said from the start I'm going to try and really implement a lot of the strategies that I've been putting up lately. Like 20 people liked that video. A lot of people commented on it. I got a lot of direct messages through the website and through TradingView. That video did get me a bunch of activity on TradingView, not just direct messages, but a lot of people came through. I could see and hear when people are like, they're using my indicators or they drop it onto their chart and stuff like that from TradingView, right? I get all those notifications. And they're just nonstop, like brrr, all day. But there's like 700 views and only 20 likes. Like, it would be a lot more beneficial for you guys because I would understand more of what you're looking for if you simply clicked like on the video. That's it. So do it on this one and help a brother out. I think the coffee has gone crazy. What? Why? You think coffee's gone crazy? Yeah, we could say that. That's true. Let's see where we are on the zero lag. Yep, I'm breaking above my short-term moving average. I want to see if there was some activity that brings me back to this level. We're pushing in. Yes, actually, there was here. Oh, wow, look at that. Okay, liquidity swept here. Right. There. This is what I'm looking for. This is what I'm looking for right here. Right into here. Already moving into that position. Good. Yes, good. I got the same on TikTok. I have 2,000 views and only 60 likes. Love the zero lag. Oh, thanks. You're using the zero lag. Good for you. Couple of things I didn't really show people about it because it can be a little intimidating to do. I can give you. You're at work right now and you're doing a thing. At home, work, doing a thing. So I don't want to get into that right now. But you can play this video back. It's a pretty long video. I won't be able to tag the timestamps in this. It's just going to be way too long, right? But there's this thing that you can do, right? If you want to find out like where price action is supposed to go to and give you a reaction. Multi-time frame moving average. Yeah, the zero lag is the multi-time frame moving average, right? That's the one you're talking about, John, right? Good. Yeah, see, I got to fix my microphone. So it's an interesting thing, right? If you had an uptrend and then all of a sudden you got a downtrend, right? You got this little pullback taking place, okay? If your moving averages are upside down, like you see how I always tell people you got to pull into the middle of the first and second moving average, right? But what happens if you get in between the third one, okay? What happens if you get in between the second and third one? But then price breaks back into these two, okay? Watch this. I'm going to show you on number times here. Okay. What you're looking for is price action has to have enough energy to shift the moving average on one candle. Okay. Shift it on one candle. And by that, I mean the moving average is moving down, giving you lower values. And then all of a sudden, it gave you one higher value. I'm just talking about the moving average itself. Okay. You see, price got in between the first and second, and then it got in between the second and third. Okay, the second and third. This is going to show you where you're going to find reactions from, because you have to remember this is your current time frame, the higher time frame, and the highest time frame. Right? You want to know if your next time frame up above you is going to give you a reaction. Where is that reaction going to take place? This is why the zero lag is so cool. Okay. People talk about how moving averages are so lagging and they take a long time, and the longer setting they have, the worse they are. Not at all, buddy. Not at all. Watch this, right? So price moves in between the first and second, and then it moves between the second and third. If you had an uptrend, right, you're waiting for it to start going long again, but you want to know where it's going to find resistance in that uptrend. Okay. So as the moving average is moving down, okay, and you're in between the second and third, when price breaks above that low time frame moving average, if this, right, this move up here, if it has enough force, it's going to shift the, I hear you come into the room. It's going to shift the moving average up. Look at the next time frame. Look at that and mark it. Okay. That's because your moving average shifted up on one candle. You're going to have short reactions from here. You're going to want to start looking at shorts. And that is if you have there's a divergence here. Okay. Bearish divergence here. So you're looking to go short. Where do you want to go short? You want to do it below this level, right? Because inside this divergence level, right, inside that level is ranging. You want to get below that. So you're here. So we're starting to get that same kind of reaction now. You're between the first and second and third, so you don't have it just yet, right? Just don't have it yet. And what's up, Nor? I see you in the room. Your mic's off, though. So what we'd be waiting for here is, again, I'm just looking at the, right, the first and second moving average. The blue one's the third. Price is moving in between, right, all three of them. Okay, so I don't have what I need yet. Okay, and again, the third moving average is primarily your resistance. Okay, it's your support and resistance from your higher time frame. Since these two moving averages haven't lined up yet, and you're still far away, then I'm just going to be waiting for certain reaction. I'm going to wait for another reaction. But I could look backwards, right, and find out where I'm supposed to get another reaction, right? It moves between the first and second, and then the third, right? So price actions here, outside the moving average, they're all upside down. You get in between the first and second. Then you get in between the second and third. If you shift this moving average down with one candle, then you're going to get long moves from here. But nowhere does it shift down. It just doesn't do it, right? You're already in your long position. So it's not like price going to drop and then give you longs. It's just not shifting down anywhere. Oh, hang on. Nope. Yeah. So it has to be a close below that shifts it down. Here we go. Here it is. There it is. Didn't see it. Oh, nope. This doesn't count because price has to cross over and this moving average has to be on the other side. So that doesn't work. That's not there. So it stays in its long trend. We're still good. Yeah, so I think we're still short here, right? Because this is implying that you're going to be going short and we're still going to be short here. So it just looks like it's going to wrap out this liquidity and then be back into the shorts. We'll find out. Excuse me. There we go. Sorry, guys. Move my camera around. There we go.
Good morning, good morning, good morning, good morning, good morning.
Oh, my God. I don't know if the stream can hear you. We'll find out. So if you... Actually, I could find out. Hang on.
We'll find out right now. Good morning.
Yeah. Give it a second. It takes like a little while. There we go.
Yep.
Yeah, you're on there? Game on.
Yep.
Even better. What's up, Nor? You at the home lab?
Yeah. I'm at the home lab.
Deal.
Working.
Obviously, I am doing the same, right?
No, this is great. So my question for you on liquidity.
Oh yeah. That's right. You had a question.
We have bare liquidities, right, on the sell side, and then the buy side picks it out.
Yes. All right. So that people understand what you're saying, let me just do this.
All right, so
bearish liquidity on the buy side, right?
Yes. So right now it's going into I see some liquidities going up there that you're going, right? So sell side, obviously, there's a sell side liquidity, and then the buyers buy it out.
Mm-hmm.
Now, is there a bull liquidity where the sellers take it out?
Of course, yeah, absolutely. That's how it works. Because if you think about what it is, right? When you say bullish liquidity, okay, bullish liquidity means it is the stop loss orders of the bulls. Those are the stop loss orders of the bulls, not the exit orders of the bulls. Right? So if you got this, right? That means bulls wanted to come in and buy at a certain level. Right? They wanted to do that. This is their exit order. This is their stop loss order. So that's what it is.
Okay.
All right. Make sense?
Yes.
Simple. The thing that's always confusing about that is the name, like the phrasing for it. They're called buy side and sell side, right? And it's kind of weird because when you're thinking of buy side, you're thinking of this down here, buy side liquidity. No, you're looking at buy side stop loss. Buy side liquidity is it's just the opposite, right? Buy side liquidity is they're going to be going up. So liquidity is down there. It is their stop loss, and then their exit is up there somewhere. Now, if that's the case, this is why the phrasing is kind of upside down. If that's the case, then that means somewhere the bears want to get out, and that is their exit. That's their exit. There. The bears want to get out here. Bears want to get out here. But their stop loss is there.
Okay. Now, can it be vice versa?
You mean buy side having an exit and sell side having an exit, like the other way
let's
around?
say if there's a big buy side. Let's say if that wick goes all the way up, right?
You're talking about this one that's running up here now,
that
right?
one. If that goes all the way up and it creates a new high.
Mm-hmm. New high. Let's say a higher high, right?
Yeah,
Okay.
higher high.
Mm-hmm.
A very high high.
Okay.
Now, wait, I think I answered my question. So, on the buy side, there is liquidity, which the sell side has to take it. Yeah, okay.
Yes. Yeah, they have to. They have to initiate it, right?
Yeah, I just answered my own question.
Yeah, there you go. That means sellers are up there. That's it.
Yeah. Thank you.
Yeah. No problem. Yeah, sometimes the answer is real simple. You know, and like I said, it's really the phrasing just kind of throws it off for us sometimes.
Yeah.
Let's see what's happening here. 101, 938, 933. Nope, not what I need. Okay. I don't think this is going to push long too far. Yeah, it's not going to push long too far. I'm going to close this one out.
I'm using your zero lag,
Mm-hmm.
and I'm doing some testing on one of the strats. So far, need to do more testing. I was back testing.
Oh, the strat for the strategy for the group.
Yeah, so
Okay.
I was really back testing it, and then I was showing nerve about it.
Yeah.
Very good.
Great.
Just has to write down and just to see, when to go in, when to come out.
Right.
And
Kind of tidy up some things.
yeah.
Okay. I'm going to close this out too.
Sorry.
I see another entry set up here. Yeah. There. Do another one right there.
That's 1 minute. 9:30.
Yeah, hoping it gets there, but I see a lot of loss in momentum of these candles right now. I know you understand it. I'm just kind of repeating this for the other people that watch
Okay.
on playback and stuff. So when I say momentum in the candles, and I'm sure you guys have heard this before, there's loss in momentum in the candles. There's no more trading activity. Okay, long wicks means less momentum in the candles, right? Less momentum, right? That's what that means. Long wicks is less momentum in the candles. So whatever momentum you had, whatever direction you had, you start getting long wicks, you're losing momentum. So that can happen anywhere in the trend. But if you notice, anytime you get a long wick, right, to the downside and a long wick to the upside, this ends up being, on a smaller time frame, ends up being a little order block. All right. So there's going to be, a lack of interest in this position. It's going to be a lack of interest there. When price gets to that level, you're going to see it kind of slow down. So what we have right now is like big candle pushing down, small candle pushing down, and then reversal, small, large candle. So as the candles are larger, you have interest. You shouldn't have large candles down here near support. You shouldn't have that. Okay? you should have large candles pushing up at support because buyers want to buy low, sellers want to sell from the high. So this makes sense. This doesn't make sense. I don't agree to this, right? And if you take a look at the candle itself, like really kind of inspect the candle itself, you see get a long wick at the top and a long wick at the bottom with a nice bar. And what is this one called? Like a spinning top or something like that, Nor? I don't remember what that's called.
I have no clue.
Whatever it is. I'll call it a firecracker. Right? Come on, close the position already. You already wicked through it. Let's go. Oh, did it not enter? Why is it not doing that? That's interesting. I set the order. It crossed it. Didn't take it.
It didn't like it.
That's interesting. All right. Come on. Yeah, it's still not really a good move, though. Not really feeling it. There you go. Take that in. Close this one out. Let that one ride. Close it out. Oh, yeah. And of course, I have two different amplifiers for my microphones, right? It's like the one I have plugged in now, it keeps giving me this like static feedback. It's annoying. I can hear it. You can't hear it.
Nah, yeah.
So long position is primarily above this. It's because there was some activity I saw in the way the algos like setting things up. There's a divergence here in this move, right? See this? These lows are trying to get higher. Even the stochastic is hitting higher. So there's a divergence here with a change in the state of delivery. Downtrend. Candle breaks the high and the previous open. One candle. That's a first indication that tells you, hey, the bears were in control. All of a sudden, the bulls are interested in this level. Okay, I'm going to assume the bulls are interested in this whole level. So I only want to buy above this level. That's it. I just want to buy above that level. But I need to have something to tell me, like, this is a good position to buy in, right? You know. But the thing that kind of worries me is this long rejection here. Bearish rejection, right? So there's a lot of resistance like right in this space here. And it's the same place that divergence was taking place. So, but nevertheless, earlier I was talking about changing the state of delivery. So that's why I ended up bringing this one up again. And am I sitting inside that divergence flip zone? Remember that divergence thing I showed you the other day?
Mm-hmm.
Yeah, I think that's where we're sitting right now. Yeah, it is. That's this. Yeah. So market's trying to flip in this zone. This is from 30 minutes, a 30-minute flip zone. It's a hidden bullish divergence. Just going to drag this out where it needs to be. There. And then the support and resistance are above it and below it, like we talked about. So yeah. So this is inside the trading range. I completely forgot to release this indicator, the digital range smooth moving average. I gotta switch it so you can use it as different types of moving averages. But it tells you when liquidity appears on the chart. I want to see if I could set up to like do multi-time frame like the zero lag. That'd be really cool. Because if your price is above it, right?
Mm-hmm.
It tells you, it's like it's smoothing out the level of where liquidity exists below you. Like when you're too far away from it, it changes to red, right? So it changes to red. Price needs this for liquidity. Comes right down to it. Gives you a divergence afterwards. And if price is below it, you'll stay trending short, right? Until it changes to green. Then it says, okay, there's liquidity right here. It found liquidity. Smoothed out the calculation for it. It says, okay, I need to pull back to this level and get liquidity. But then you need to watch for like reactions at that level. So and it's funny. It's just like it's a simple single line right there. You know. I have this one set for 20 though. There. Simple little filter tool. So yeah, I think I'm gonna test out pushing that into the zero lag as an upgrade. This way, it'll just say, hey, there's liquidity at some level. And what do you call it? It's going to, so if you're, what do you call it? Let's say you're above it, right? And it changes color. Okay, it's going to go to the next candle. And it's going to start drawing a line automatically. It'll just do that until price crosses that line. Then you know you've swept the liquidity. And it'll do it again. Bloop. Done. That'd be a cool little tool, right? For the zero lag. I like that.
Yep. A little upgrade.
Mm-hmm. Game on. So yeah, this is a change in state of delivery that I was looking at before. Still inside of this divergence zone. I don't trust this. Oh, no, I better trust it. This is the other liquidity down here. This one. It was just never swept all the way. And I was marking these out the same way that I showed you. That you learned. Just want to see what's going to happen with that one. Watch, give a little wick and fake out, right? We'll see. Boom. There. If it gets down there at all. Yeah, it's a reversal. We have interest. But bullish energy. So far it's saying no good. Anyway, I was going to do this and part of London and part of New York today. And then my plan was to go for a bike ride for a while, but raining. It's annoying.
Yeah, I said before, it's sunny.
Like it's awful. Like it's like gray soup outside. I woke up in the middle of the night and it's just raining hard. I'm like, are the sprinklers going off? Like, 'cause they hit the window every once in a while, right?
Yeah.
And I had to actually step outside to figure it out. But yeah.
That has to be hard rain then.
Oh yeah.
Wow.
Yeah, because it was hitting the awning and it's hitting the side of the window and everything else, the siding and whatever. I was like, what's going on out there? So I just went out there to take a look. It's like, man, I got this giant box from this desk. I gotta throw that away in the rain.
Nope.
Yeah, that's a nope. All right, so price pulled up in between both of the first and second moving averages. Exactly what I was looking for. So we're ranging now, right? I don't have a higher value, so I don't have a marker to tell me like where it's supposed to go to. However, in the previous move, pulls up in between both, gives me a rise over to here. All right, I get a cross above, give me a rise, and this goes to the third time frame. So that means we're going to get serious reactions to support and resistance, because this one's support and resistance, current time frame, trending time frame, right? Let's take a look. Getting reactions here at that same level that I just marked. This looks like it looks like New York is doing a late double liquidity takeout. Like usually it does it earlier. Like New York will come along and it'll just do like this, right? Something like that. Just do this big move up here, this big move down here. This morning, like that should have happened like an hour ago, I think.
Yeah, I guess everybody's for the news, the FOMC. FOMC. I think
That's
everybody's
true.
waiting.
Well, if that's the case, I've got liquidity marked out, so I could take a look here. Give me a swing. All right.
It's just
So
gonna be just ranging.
I could go.
Up.
Yeah. Okay, it's fine.
ES and then Q made a new low.
Do a buy over here. Bring it back up to this liquidity, right? And so hack the market. Why not, right?
Yeah, I would love to hack the market.
And do a sell. Let's see. Let's push this low. Yep, strong here. Down to what? Hey, where's that nice support level? Okay. Do a sell from here. Down to that level. This is what I do when I get tired of waiting for the market. This is a swing trading technique. I'd be like, all right, yeah, I'm just going to wait for price to get up there and sell off, you know?
Yeah, retracement.
Yeah. Yeah, because it needs to, obviously it needs to sweep liquidity because it's going to lose it all in this double liquidity takeout. If it's taking out liquidity here, right, then it needs to create more liquidity. There's a fair value gap left up here, right, and it's a mix-up of two trend lines. So the 5 and the 15 are mixed up here. So there's a lot of support and resistance in this area. If you got two time frames that are just kind of mixing over each other, then you're kind of messed up here. There's a lot of resistance on below it. I'm expecting that price is going to come up to the fair value gap and then just swing back down, right? It's going to swing back down because price action is reacting to that, right? The high time frame moving average, which is support and resistance of the 45-minute. And if I look backwards, let's see what we got here. Nothing in particular here. Nothing really relevant per se. So I'm guessing like a light reaction to that point. Oops. There we go. Yeah, this is going to push strong. Yep. Let's see here. Oh, 3.
So it's gonna pull back and then it's just gonna dump.
Looks like here. Oh, right to that level. All right. I'll take one in. Take that level out. That'll work. Using the RSI formula. I just want to see what kind of... There we go. So we got another divergence hitting here. Right? Between these two. So we got some support activity sitting at this level right here. Right in here at this price level. We got support sitting. I just want to see what divergences look like for a second. Nothing really. Yeah. All right, so here's a perfect example of how people get fucked. High here, lower high here, right? Which one of these highs caused a break in structure of momentum? Right? Which one of these highs caused a break of structure in momentum? that one. Because this was a high, broke over its internal lows, but didn't break its swing low, right? This low broke its highs, continued the uptrend. This came down, didn't break a low with price, and this. This is part of the calculation that the breaker does. It does it automatically. All right, this is why it's really why that indicator is really nice. So this high came down, give you a low, lower than this, but the price didn't do the same thing. So it's no good, right? Which means this high is weak. So if I do this, come on, there. If I do that, that means people are going to get caught in fake outs here. And the stronger part of the divergence is that part. Because that broke down and price broke down below the swing, right? Broke everything down. So that means this high is the stronger one. Now you were asking before about buy side and sell side. Here it is. The stop losses are up there. That's it. They're up there. So what is the daily high? I want to know. Let's find out. There's a daily high. Oh, wait. Was that it? There it is. It's all the way up there. It's really far away, though. I like using the 8-hour. Right near that swing high. All right, I was saying that's the one. So you're going to get a wick over this, creating a new high. So in other words, you were talking about how what happens if price makes a new high? Is that like a new sell side liquidity? What happens if it makes a new low, lower than the previous one? Is that new buy side liquidity? That's essentially what you're getting at. What happens when it makes a new high or new low, right? Well, the only way price would do that is if it runs out of liquidity and it has to create new liquidity. So new liquidity would be a high or a low further than the previous one, right? But price is all the way over here now. I don't need all this. I know what's happening. I know what's happening with price. Price is all the way over here now, right? So that means people are looking at, sorry, price is over here. That means people are looking at, oh, look, they created a new high, right? That's how they double liquidity takeout makes new liquidity, right? There's new highs. And people will try and use those as stop losses. But their stop loss actually needs to be according to this one. There. That's where the stop loss needs to be. So if people aren't really looking at this, right? They're not really looking at that. They're over here on their chart, especially in the short time frame. And they're looking at the swing high. And where's their stop loss? I don't know, maybe like, 1 or 1.5 ATR above, something like that. Price going to come up here and take them right out because their stop loss should be up there at that stronger swing high, right? Price needs to make a new high. That's the high. That's the strong one. This is not the strong one. That's not it. And it's because of the divergence that's there. A divergence means somebody stepped in and tried to do something different to the market. That's all it means, right? So if they stepped in here and they started shifting momentum, great. They didn't step in strong enough to shift anything. So they step in again. When they stepped in here, then they shifted the market, right? It's right there. Then they shifted the market. So where is all of their orders? Where's all their orders? They used all their orders here. They don't have any more orders left. So now they need to create new liquidity. Well, they do that by making another high. That's it.
Okay.
Most people are probably looking at these. And that's a failure. It's not going to work. So I guess we're going to go back to yesterday's high, because this is the most recent one. And this is previous day. Oh, 8 hour. Oh, that was the, what do you call it? Daily high? I don't really like using the daily high from the 5 minutes. Like, too far away for me. Yeah, not my thing. There. Still in the shorts.
You're in the shorts?
Huh?
I say you're in the shorts?
Still in the... Well, no, I'm not in the short. Price is still in the short move. So I guess liquidity takeout's not done yet. All of this was just engineered. This is no trend. That's good. That's good. All support down here. All support. This is nothing. And this is right where price is now. It's just like lack of interest here. Yeah, what is that? 2100 hours? Yeah. There. What's this look like on a 50? There's some nice reactions on the 50. It's nice because it doesn't really give you like a lot more noise for liquidity. Like when you bring it out to a shorter time frame, it's not like it shows you a whole bunch more. So it filters out pretty nice. I ran through last night. I was watching some old videos that I put up some time ago, and this was in. It was grayed out. Like I didn't have it turned on, but it was in one of the videos. I was like, what the hell is that thing? Dynamic range? What dynamic range? So I created some stuff I've completely forgotten about. Come on, go long. Do some nice thing here for me. That'd be good. Where are we now? Yeah, still at the overlap of both sessions.
Yeah. Yeah, I'm not looking. I'm looking at two other.
So you want to do Asian market tonight?
Yeah, do Asian market, but since it's low volatility, I'll switch to 6J.
Okay. Should I scare everybody and like do a 30-second chart?
Oof, it's up to you.
I'll give it a shot. Of course, I'm going to do it on a sim though. I don't know.
But 6J is basically Asian.
Yeah.
It's the yen.
Yes.
So basically, that will move during the Asian market.
Oh, that's true. Okay. Yeah, I forgot about that. I don't need that anymore. So let's see what we have here. Uptrend, lower high.
And
Nope.
Yeah, just took out the liquidity I had.
So this is gonna be the proper low. I'm surprised I don't have these set. I thought I would. There. Change the character here. Come on, play nice. There we go. 2 changing character. That one's made off of a lower high.
Now it's market's messing.
Yeah, it is.
Like, which way should we go? Which way should we go, George?
Come on. Give me the thing. There we go.
See what gold is doing.
Which one?
Gold is out there. It's strong on the buy side. 6J also.
But full pushing long.
Yeah. I'll do 6J on the Asian market, which I could. Let me scan. I'll do some trade on the.
There we go.
Yes, they want to take out that. They took out the liquidity I had.
What time frame is that you're looking at?
15.
Drop to a lower, you might find a rest. If there's any other. Do you usually look for liquidity in the 15? Or you do it for a higher time frame?
I do it on 60, 30. If I do the daily charts, so when I wake up, I do the daily charts. I look at the highs and lows for the day when it starts. And then I'll check if there's any liquidity on the daily.
What do you do if you find liquidity inside of liquidity? Like just from like one time frame apart?
That's I'm still learning.
Okay. It's going to kind of backtest that and see how it works into your strategy, right? Because there's no, it's not like I'm expecting like a definitive answer out of it. You know, it's just like I'm just interested in hearing like what people, what do they derive from it? You know?
Yeah. So I go from the 60. I'll mark if there's any 60. I'll mark any if it's 30, and then I go to 15, and then from there I'll just mark. But let me see if I can start with the 10. See if there's any liquidity inside there where it goes for it to grab it to go in one direction. Right now I'm in a 1 minute. So, and I noticed that liquidity that why I mentioned before is because every time you hit that button to, let's say, to go to buy,
right,
and it starts selling, it always grabs a little piece of liquidity to make it go forced.
Yeah,
that's on the 1 minute. So
yeah, the pullback. That's right. Why is this not pushing back long yet? I'm expecting this to go back long again. Like the way it's just playing out, and this must be like the strong part of the overlap. Yeah, you know what? You're right. It's the news. It's the announcements taking place right now.
At not 10:30. There's one.
Yeah, another half an hour.
Yeah. So, but FOMC today, so it's just.
Okay, we got that. We're good here. Great. Okay.
10 o'clock.
Interest for the shorts. Great. Yeah, it's just ranging now.
Yeah, and this is where it gets everybody. On this range, it gets everybody.
Long to 102, and I know I'm on BTC, which is fine. It's just this just shows you like how influenced it is by forex markets. You know.
Yep.
I mean, if it was anybody else looking at it, they'd be like, oh yeah, it's forex. It just moves the same way. You know. I'm gonna have GC up here, and it's not that much different.
No, it's the way the market moves. See, I knew it's gonna. This could probably be a fake out to the sell side on on ES and Q, but let's see.
Yeah, see, everything's all mixed up. Averages are in a short position.
Let me see.
Yeah.
Nah, it's still strong on the buy side.
Let's see here. Yeah, already had that. Oh, there we go. See your reaction from there. Let's see. Let's pull this one here. Okay.
It's like it's funny. Yes. No.
Yeah, volume's picking up again. Starting to. Because even on the previous candle alone, for the whole trading candle, it was only about 80.8, and we're what? Still 2 minutes left from this one.
Let's see. We have crude oil at 10:30.
We got what?
Crude oil.
I thought they were postponing that.
I'm not sure what they're postponing, but I was on was at a live on YouTube before.
Yeah.
Trump was talking about stuff. I was like, oh, great.
Got to make his announcements. Got to.
Yeah.
There's going to be a lot of conversation in the beginning of his first quarter, right?
Mm-hmm.
Then he's gonna get all the hate for, what do you call it? For going to the golf course he owns in the Cayman Islands or something. I don't know.
Cayman Islands, probably.
I'm just throwing it out there.
Probably.
Like as if I don't care what kind of position you're in. And it's not like I'm trying to say I love him or hate him. Everybody, just like you're in a position like that, take a break, go play some golf, come back, but get shit done. That's the thing. Just get shit done.
Like how we're gonna be in Puerto Rico with a pina colada.
You and me.
We have to bring Merv also.
They'll find us.
Okay, and in the Ochoa Islands.
Mm-hmm. Please. Yeah, I would see. I want to check Brazil once, just once. Maybe I should do that. Go to Brazil before I go to Italy, because I told you, I go to Italy, I'm not coming back. I am not coming back.
One-way ticket.
I don't even know about that. I might as well just hitch a ride in some landing gear or something. I don't know, man.
Go skydiving and just hide over there.
So this was the change in state of delivery that took place a while ago.
Mm-hmm.
Okay, in that downtrend. All right, downtrend. Change in the state, broke above that high and that close, obviously closed the opposite way. And it was overtaken with a gap, right? That's fine. Not worried about that. But this is what I'm waiting for. I want to get longs above this level. And you see how we got reactions from that level later on, right? So now you're getting these long moves in between your moving averages. Iago's doing a nice job of saying, hey, you're getting a change in your direction, right? Just like if you watch that candle there and look down. Remember that thing I was telling you? I was talking about it earlier in the stream too. If you get, for example, like here, RSI crosses through the body of a candle, then ends up in front. Mm-hmm. As long as it stays in front, you're in that direction. We're in a downtrend, but this is like all subjective. Are we flipping now? So you had the divergence, and then it plays out that the RSI flips sides from the candle, right? gets ahead of the candles, stays ahead of the candles. Now you're getting into a bullish color. So I want to see if it gets into this bullish zone. And if it does, then obviously, you know, it's going to want to trigger that order and that one, if the price ends up coming back down. But I want to see if I can get it to another buy above support and resistance. That's the part that's like iffy.
Today's Wednesday, right?
Yeah. It's Wednesday.
Why keep on thinking it's Thursday? I don't know.
You got me? I don't know.
I think I want it to be Friday again.
Want it to be vacation day again. So let's see here.
Come on, yes, you know you want that liquidity up there.
I'm having trouble finding. Like I don't want to do this. I was about to say I want to take a buy above this level. I'm just looking for the exit. I just don't see it. Like I don't see where it would exit from. I'm not.
If you don't see it, don't take it.
Well, that's what I'm getting at. I think in doing that, I'm chasing the trade, right? Mm-hmm. It looks like there's an exit here. Looks like that's an exit there. I need to find if I have a... Okay. Downtrends. No change in state. Support here. Okay, so... Alright, I'm going to do this. There. Buy is above that level.
There it goes. You know you want that liquidity.
Yeah.
Oh, no, I'm not even trading. I'm just... I want to get
playing
into...
it out. Just playing it out, right?
Yeah, I want to get into a trade, but...
Yeah, see, I don't see a proper exit here. And I know I'm not looking at a large enough time frame, which is fine, but I think if I enter the long just because I want to take the long above there, then I'm just chasing it, and I'm going to lose out, right? Yeah, the exit's like right there, just below these two.
Yeah, I don't trust this liquidity on the EIs. So it could take it, but I just don't trust it. Break a structure, change a character. Not a break a structure.
Mm-hmm. Right, so we're ranging in 14. Look back, it's fine. Oh, popped up. It's not enough. The swing is here. This swing commits to a lower close. There's a lot of resistance right here. Let's see here. Let's assume this. Let's just assume that, right? Down here. No, Jesus Christ. Wow. No, it doesn't. Yes, it does. There we go. $2.76. Really? I don't know. It's got to be 1.7. Mm-hmm. Okay. I'm just not seeing it project that far, like that long. I'm just not seeing it.
Probably be a fake.
Yeah. It's already slowing down.
Yeah, that's what I'm saying.
Yeah, I'm not going to chase this one.
That's what I learned. If it doesn't look good, don't take it.
Mm-hmm. think it's already, yep, it's losing interest. I love this kill zone. This thing is badass. Look what's happening.
Mm-hmm.
See that? How it's disappearing? It's getting skinny right there.
Yep.
Losing interest. While this is still rising. That's fine. Mm-hmm. I mean, if I was on the reel, I would, I'd be trying to chop away at some shorts on this. Every time it gets above the previous wick, enter into a short, close at that previous wick again, right? Like right there, gets above that level. Enter a short. It'll rise up, pull back down. Well, I'm sorry, above that wick, end up short.
I remember I told you I didn't like. So you remember I told you I didn't like that.
Yeah.
That liquidity grab on ES.
Yeah.
No, thank you.
Yeah, it wasn't good. I didn't like it either.
And yeah, it flipped. It was just, and again, you could tell by the candles the candles give a story if it's long or not.
Mm-hmm.
And it was struggling to get to that liquidity spot.
Let's take a chance and pull this out. Pull this out of my butt. Let's see if that works. Because again, it's that change in state of delivery is right here, right? And that was for the short, right? Pushed up, change in state of delivery. That was the top of it. So getting below that's going to be pushed back down for the short, right? So I'll see how that works. Just want to try that out. In the negative so far. That's fine.
That wick.
This is one of the candles that just like screws everybody, and I just jumped in on it. That's fine. I'm not worried about it.
Somebody always tells me treat it like if it was your real account.
Well, in my real account, I would observe that there was a nice big push here, but the push was not a breakaway candle. Okay. None of these candles were breakaway gaps, breakaway candles. However, this one, right, with an indecision, left a fair value gap inside of it. It is not a breakaway candle, but it has a fair value gap. So I'm thinking like we got to get back down, tap in, right, and then come back up to support and resistance. So that's my impression. Those breakaway candles are the ones that I don't trust. They're the ones that create the, what do you call it? Change of character?
Mm-hmm.
Like, do I still have one here? Yeah. So a changing character here, right? Breakaway candle is that one. People usually look for the fair value gap that was created from this break, you know? For example, this one here, right? Look for that. And they'll see the change in character. They'll look for the gap. And if they can't find one, they don't want it. But they'll usually just always take the one that gives a change in character. Here's the one here. All right, swing lows there. Closes below. The gap is there. You know. And to be honest with you, if you get a breakaway gap that's followed by another breakaway gap, well then this one is nothing. The next one is it. So the next one is nowhere. There's just no. Oh, there it is. Yeah, another fair value gap there, and that was recovered. This one wasn't, and it's all the same. It's the same range. So we'll see how this plays out. Because I'm intent on finding something a little bit more definitive on fair value gaps, right? And it's I'm not happy taking the fair value gap. Yeah, thank you, Chrome. I got it. Sending me notifications on another screen. I'm not content knowing that fair value gaps created on like price action reversals. I'm not content that this is like the fair value gap that needs to be recovered. I think it's the ones that are in the trend themselves. This is not in the trend. So I want to see this taken. Oops. I want to see that taken. That level right there. Oh, I gotta do this right here. There we go.
Oh. Oh, wow. That 6J played out.
Yep.
Yeah.
Good. Come on, where is it? Applying fade cut. What is going on here? Oh, God damn it. Stop doing that. There we go.
NASDAQ Freeman Technology.
Nah, I got all kinds of new add-ons to my OBS. I think I'm going to play around with that for a little while today.
OBS is good. I had an OBS and with a caption card, but I had it was a good caption card. It was not the Elgato caption card though.
Right.
It was good though.
Okay. So yeah, I got all kinds of new add-ons for it and stuff like that. See, I don't know, not to cut myself off on that one, but yeah, it just wiped out that fair value gap that I was just talking about. You know, and this fair value gap was not created from a break of structure. Like here's the structure, right? It was not created on a break of structure. It was created in a trend, right? So here you have a downtrend, then you have a pullback and another downtrend. Well, what happened in this downtrend? You get a break of structure, right? But it's with the trend.
Yeah.
It's with the trend. Like there's your structure. Break of internal structure, right? Made a little gap. It's there. Immediately recovered, which is fine because it's pulling off of a fair value gap. But then you get this other one. You got a new trend happening, breaking highs, higher lows, higher highs, everything you need. And there's a little fair value gap in there that did not change character or, you know, didn't give you new character or new trend or whatever. It's just the trend. That's it. I think this one of these theories about fair value gaps, I think it's just overdone. It's just like they're overcomplicating it. Doesn't need to be. Right,
so it's a complicated situation.
Yeah, they're called girls from OnlyFans.
Yeah. Or Feet Finder.
Feet Finder. All right, Zuck. There we go. Let's see what kind of momentum we have. So yeah, we got to push long, but not much. Because this came down, made a low, right? Off of a high, but they're both still above the midline. So it's a continuation, right? Right, comes down, makes a move. It's a continuation, but it doesn't have enough momentum to do anything. So I want to see this come down, something like that. Because this was good. Come inside of here, right? We're in here. Starts making this turn down, and it happened after that cross. So that would be like, okay, yes, I'm going to take a short. As soon as I see this, I'm going to take a short. Get out at support. Where was the support? Well, you can see that by looking at the algo, right? Where was the support? Cuts through the candle right here. So that's your support. You enter short, down to support. Get out. Then you get a fake out. Works for me. I like that strategy. Real simple. I've gotten more comments in I've gotten more comments quickly on that strategy than anything else. Just like in a matter of 2-3 days, people are like, oh, that's great. I tried this and tried that. That's great. I paired it up with another indicator. Good for you guys. Great. I like that. You know, make it happen. Still pushing bullish right now, bullish momentum, but not enough to matter.
Yeah, but it's slowing down. It's looking at the story slowing down.
So yeah, so we're going to be inside of what, like an inducement area now. It's going to be creating like false highs and lows. So yeah, this is the part where that thing that I told you about before, the fade is going to take place, right? So we got higher highs, but we don't have any structure. We don't have any new structure. We got a lower low, right? No new structure. So what happens to happen now is price needs to come up. If it wants to go long, it needs to come up, and it's going to do a higher low, lower high, higher low, lower high, right? So we just need to find out what kind of structure it actually makes inside this fade. I know, a triangle pattern, whatever bullshit. You just need to figure out what's the structure that it's making, right? So do this. And it did that here. Low, wait, there, right? So do this. So what was the structure that it was actually making? You just look at the individual candles.
Yeah,
Highs being broken, but your moving averages are upside down.
And you got the flag.
So it's breaking lows here. Breaks its own high, so you're good there. Stops breaking highs, so don't take another long move. Breaks a low. Doesn't break a low, don't take a short. Moving averages in front of you. Breaks a high, you got a small move. Your resistance is right there. Clean break at the low. Break at the external low. So you're good for your short. Your support and resistance is right there. It's moving average. Right? So price comes down and it says bloop, stop. So now you need, when you hit support and resistance, you need new structure. So doesn't break any highs or lows until this candle. You broke a low. Okay, great. Another broke on a low. Great. Doesn't really do it. It's got a big rejection. So I would say maybe like the 50 period moving averages over there. It's possible. But I wasn't going to add like another moving average over here.
Okay.
So there you go. There's your 50th right there.
So I added your 0 time with, I'm using the Bollinger Band with another Bollinger Band. But your
cool?
Bollinger Band's on a high time frame, and it's powerful.
Yes, that's pretty nice. I like that. It's not bad. Let me see what that looks like.
Oof. So I found a 1 minute liquidity on the ES, which is just, it grabbed
Just now. Okay.
But it's just ranging.
So yeah, here it is. Price is trying to push out of the higher time from Bollinger Band, but the other one is in the way. That's it. I'm just going to show the moving average inside the Bollinger Band. There's both of them. So yeah, so there's your reaction to that one, right? So if your low time frame is below the high time frame, then your price has to be down there to be short. Or right now we're stuck inside of both. So let's see what we got here.
And that's when these days is, I say, Wicked Wednesday. Because for
Wicked
me,
Wednesday. Okay.
it's in the middle. It's going to wick off. It's going to have some good wicks.
Mm-hmm.
And not only that, it's weird. And it's ranging.
Okay, there we go. What's this? LRP. LP. Nope, I don't need that.
4 minutes. We have a news.
Oh yeah. Well, yeah. I said I'm probably only going to go to like 10:30 anyway, so I might as well just be, 10:30 New York. I might as well just be cutting it at this point. Got everything I needed.
Cool.
Yeah, let me shut these off. Close these out. I was hoping price actually would come up there because the news is just not going to get there. That's fine. And so you got high here, lower high here.
It's something.
So yeah, even here, divergence on the stochastic. So that's automatically wants to push short. So below that line is your short. And the support is where? Right there. Mm-hmm. That's it.
GC just took a dump.
Yeah, they all will now. Everybody's just going to be closing out their positions. Nobody's going to want to hold their positions and hope for longs with the news coming out. They're just going to drop them at a loss, or at or they put in for small positions to break even if they had to close early. So that's all.
Yeah, GC just dropped.
To answer your question, John, I'm going to try and do a live stream once a week, right? He's just asking how often do I live stream? I'm going to try and do one once a week, if not every other week. I can't give you the specific day, but it's usually going to be on Wednesdays, right? This time of year is a little difficult for me. I have projects that I'm working on, and I'm actually going to work on one of them later today. And now there's another project where I'm going to be including the the digital the dynamic range moving average into the zero lag. So there we go. Thanks for listening, John. You can close the stream if you want to. Thanks for being here. You need it daily? No, I can't do it daily. I need to focus on my trades. Sorry, buddy. Unless you feel like paying my bills, that's all good. But anyway. All right, Nor.
Soon he'll do it daily.
Yeah, soon I'll do it daily. I take my next vacation. Yeah, Nor, I'm going to close out. I'm going to shut the stream down. All right. I'll check with you during the Asian session later tonight. What, like 7, 8 o'clock tonight?
Yeah, around that time, because I got to go to Montclair. I got to, my daughter, I have to finish moving her.
All right, cool.
All right. All right,
bro. I'll check you later.
All right.
Peace.
Bye.
All right, everybody. Thanks for tuning into the coffee shop. This is a nice little fun thing. Nice thing for. Let me close out of my. There we go. Just getting out of the Discord right now. There we go. Sorry. Like I said, for anybody who is looking for a bunch of excitement, this is what day trading is like. Thanks, John. You have a great week too. Don't work too hard. Try and kick your feet up, when you don't have clients in your office. And what you call it? Like I said, this is what day trading is like, right? And this is just when I'm just kind of stepping back and just doing a bunch of like technical analysis of what's going on the chart. But when it's not this, I'm bouncing through like 3 or 4 different charts, and I'm turning things on and off, drawing lines, wiping them out, all kinds of stuff, getting up. Like I usually get up like every like every 10 minutes or so. I just get up and I leave, I leave the chart alone, because I don't need to sit here the whole time. I'm not trying to take one trade after another. I'm just trying to do like a really good setup. And so yeah, I hope you guys enjoyed this one, and try and set up and do like another one next week, Wednesday. We will see. I know my schedule's a little crazy this time of year, especially this month and next month. And hopefully there won't be any kind of news things taking place that would really kind of mess up the trading volume and volatility. You see how things just really kind of died off at this point. So I'm going to cut it. I don't want to wait for news to release and all that stuff. So you guys just have a good day, and I will check you all next time. Hopefully I'll get a couple of videos up for you over the next few days. All right. So peace out from the coffee shop.